In a critical condition. And the world's biggest football clubs announced plans for a breakaway league that could shake the very foundations of the beautiful game. Let's take a look at the futures then this Monday morning, just 20 seconds to go until the start of the European Equity Trading Day. And things looking pretty mixed, actually. FTSE futures point to the downside. Elsewhere, perhaps a little upside. Let's call that flat, shall we? Because there's a lot of green on the screen, but it's not showing a great deal of movement higher. That's going to be a focus for markets, trying to find a catalyst that could take us in one direction or another. Seems we're still dealing with a lot of the themes that we were dealing with in last week, still looking for what wins out here when it comes to the global virus situation, the crisis we're seeing certainly in a number of emerging market countries right now. I'm thinking Brazil, thinking India. That's part of the narrative. Also thinking about the rebound, though, we're seeing in certain economies in the Western world where vaccination rollouts have been more successful. So that's all part of the mix. The expectations around earnings season clearly very much to the fore as well. So European equity markets then starting this morning with a fairly flat picture, not committing themselves overly in either direction. European equity markets up just 0.1% or so, the FTSE 100 flat to negative, as the CAC 40 opens to the upside, up 0.1%. So global coronavirus cases have hit a weekly record. There have been more than 5.2 million infections in the last 7 days, more than any other week since the pandemic began. And the outbreaks are accelerating in many countries that are ill-equipped to deal with them. It's casting doubt on the hope that the end of the pandemic is in sight. Joining us now is Stephen King, HSBC Senior Economic Advisor. Stephen, very good morning to you. How do you think about the fight against the virus at this point, and what impact it has on the global economy, Stephen? Because tragically, we're seeing in a number of emerging market countries that I can think of, the fight really running into difficulty. The narrative is different in some developed markets, but not all, when it comes to vaccine rollout. How is this shaping your thinking about when we start to see recovery, full recovery really, for the global economy?
Well, the odd thing is that equity markets, of course, have reached new highs over the last few weeks, which would suggest that they're simply shrugging this whole thing off, looking to a much rosier future. And to a degree, they may be right, because the US is offering masses of stimulus, both in terms of fiscal and monetary policy, all of which points to a stronger economy over the next 2 or 3 years. And in fact, the IMF is now saying that
everybody, hope you had a really good weekend. We did. And right to the business, I'm going to place a stop on profit for Bitcoin. As you can see, we hold short position at 558, 226. I'm going to place an order to sell Bitcoin if it will reach level 57,644. Okay, it will be 1%. So let's place a stop on profit at 57,644. Okay, so if you traded Bitcoin, if you followed our trades, please do so. Please place stop on profit. Don't be a hero. Anything can happen. Okay, with Bitcoin, especially these days, so please do place a stop on profit at this level. Okay, with it, whatever happened right now, we will not end up in loss. will have 1%. In our case, it will be £1,000. In your case, it will be whatever broker pays you per percentage-wise. Okay, let's see how far it will go. Maybe if it will move lower, like it did over the weekend, we will put lower our stop on profit. If you want to find out more about how we trade, what strategy we use, you can get our strategy from companyeye.co.uk, and you can trade different pairs, or you can trade Bitcoin. I always recommend advice to stick with few pairs. If you're a retail trader, don't try to trade all pairs, all stocks available in the world. Try to trade. See, we already closed Bitcoin right now. Okay, great. Position closed on Bitcoin, and right now we're going to collect our profit. Let's move on, let's move further, and let's look for another trading chance and opportunities. I'll speak to you later, guys. Like I said, for our strategy, please go to companyeye.co.uk. Okay, stay safe.
Some emerging markets struggling to contain the virus.
Well, the first thing to note, of course, is that the US and China haven't got the strongest relationship at the moment. So whereas in the past, if both of them were recovering, there'd be all sorts of synergies associated with those recoveries between the two economies and having a knock-on effect in countries elsewhere in the world. Perhaps those synergies won't be quite so strong in the months and quarters ahead. But having said that, it's also worth noting that for China, as a good example, there was obviously a very powerful rebound in the second half of last year. And although the year-on-year data in China look pretty impressive at the moment, actually the underlying growth rate probably is not that strong. If you look at the numbers quarter on quarter, they're still fairly limp. So we mustn't get confused between a kind of post-virus bounce and an underlying economy which is not quite so robust as it once was. Now, there are still some important drivers for growth in China over the long term, a huge expansion of education, a lot of capital investment, advances in technology that will surely drive China forward over the next few quarters. But it is worth noting that as yet, the recovery hasn't been quite so strong as we have seen in previous Chinese recoveries.
Stephen, thank you. Stay with us. Stephen King, HSBC Senior Economic Advisor, stays with us. Just want to return to one of our top stories, and that is surrounding football and the talk of the creation of a new European Super League. Not positively greeted, if you like, by a lot of fans who've been voicing their concerns. But it seems that Juventus, the share price of Juventus on the move as a result, up by 7.4%. Juventus would be one of the Serie A teams that would be included in this European breakaway league, breaking away from the Champions League, run by UEFA, of course. The clubs in Italy would be AC Milan, Juventus amongst them. So certainly something we're watching. We're also seeing some movements in some of the other share prices of listed football clubs. We'll come back to that story a little bit later on. Coming up here on the programme, though, building back better as lockdowns end and stimulus kicks in. Why HSBC's Stephen King thinks now might be the best time for an economic reboot. We discuss that with him next. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading session. European equity markets just keeping their heads above water, not by much, but making some modest gains this morning. Let's take a look at some of the stocks on the move this morning. Bloomberg's Danny Berger is here with those. Danny.
Anna, just sticking with the story that we've been tracking all morning, that is this new proposed European Super League for football. Juventus would be one of the clubs included in it. The thought is that they'd get more money, more backing from this new Super League. So Juventus, 1 point up 10% this morning, now up about 5.5%. ABN AMRO moving over to the Nordics. They are paying about 480 million euros over a Dutch money laundering probe over the controls against money laundering. They say now they'll see a slight decline in profit in the first quarter because of this, though only a slight decline now, and it means that the bank can move on from this. Finally, to the downside, one of the biggest losers in the Stock 600 is CNH. They've ended talks over selling their truck and bus division to a Chinese company. Bloomberg had earlier reported this, saying that they couldn't exactly reach a deal, but now that that's done, the company down about 4%. In terms of the macro picture, we are seeing some bids towards haven assets. That geopolitical tension story very much so in the fore, with the yen gaining against the dollar. We're seeing a little bit of wobbling from U.S. futures after reaching those record highs. We need another catalyst in there. And one thing that doesn't necessarily need a catalyst to move is Bitcoin. The price you see here, this is from the Friday close, so it's not from the Sunday action, but this even just shows you how much it moved over the weekend, down 8% again from that Friday number. A couple different reasons attributed to this, but Anna, for what it's worth, if you were still in crypto, Dogecoin actually would have given you gains over the weekend, despite the fact it was created as a joke.
Yes, exactly. Strange things come from humor, don't they, Danny? Danny Berger with the latest on those movers, those altcoins, certainly the focus for many thinking about crypto right now. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Well, following on from Danny's analysis, Bitcoin is trading higher this morning after tumbling the most since February. It led most other cryptos lower just days after its latest record high. The move follows Coinbase's direct listing, which ended last week valued at $68 billion, more than the owner of the New York Stock Exchange. HSBC's senior managers now have to hot desk at its London HQ. The lender has scrapped the executive floor of its Canary Wharf office. Instead, it's turned it into client meeting rooms and collaborative spaces. CEO Noel Quinn says it was a waste of real estate, with the offices regularly empty due to senior staff traveling. U.S. authorities are investigating a fatal crash of a Tesla in Texas that no one appeared to be driving. There were 2 passengers who died, but officers say neither one was in the driver's seat. It's unknown if the autopilot feature was on at the time. No comment yet from Tesla. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright here in London. Now, long before COVID-19, the world economy was in trouble with interest rates at rock bottom and productivity missing in action. But as developed nations begin to recover from the pandemic, HSBC Stephen King says we now have a chance for a bigger economic reboot. Stephen is still with us, of course. Stephen, really interesting to read your note on how we build back better, how we try to take this opportunity to fix some of the pre-existing problems before COVID-19. In terms of building back better, then, is inflation going to be part of the problem or part of the solution here, do you think?
Well, that depends. One of the advantages of a period of higher inflation is it allows you to have higher nominal interest rates, which in turn means that in the event of a recession, you can cut those nominal interest rates further before bumping into the zero rate bound. So there is a small advantage of having higher inflation from that perspective alone. But the truth is that the underlying problem that particularly the Western developed world has faced in recent times is a real lack of productivity gains. Productivity is ultimately the secret source that generates economic wealth. It's the thing that transforms our lives from decade to decade, from generation to generation. And yet productivity gains have been absolutely pitiful over the course of the last 10 to 15 years. That's true of the US, it's true of much of Europe, and explains in one sense, A, why we've seen such limited gains in GDP, and also why you've seen such extreme changes in politics, with populism coming through and protectionism and nationalism, all associated with a sense of disappointment in terms of what economies have delivered. So coming out of the pandemic, it's important not just to focus on the rebound from the pandemic, but also to think of ways of trying to, if you like, reboot productivity gains, which have been so limited over the last 15, 20 years.
And so, Stephen, do you see in the fiscal response that we've seen in many developed markets, do you see evidence of governments trying to take seriously that productivity challenge?
Well, at the moment, fiscal policy is mostly aimed at trying to prevent companies from going bust or trying to prevent workers from becoming unemployed, all of which is admirable, but it isn't going to make much difference in terms of the longer-term productivity story. What may be more important is perhaps investment in infrastructure of one kind or another in the years ahead that may be transformational in terms of the capital stock, and that could be very helpful. But what really bothers me is that I think we're still looking at the productivity story from a very much a macro perspective, i.e. what can we do on fiscal policy, what we can do on monetary policy. But in truth, a lot of the productivity story is about supply-side reforms, about competition, and also importantly, competition within capital markets themselves. And one of the dangers of things like QE is it actually has limited the amount of competition in capital markets. It's given a kind of false floor under asset values, and the consequence is perhaps that capital is not being allocated as efficiently as you'd like to see to deliver decent productivity gains.
So if the instinct in some countries, Stephen, is to come out of the pandemic and introduce a larger state, would that be something, from what you just said there, would that be something that would be in danger of not realizing the possible productivity gains on the other side of the pandemic? Link those thoughts for me if you can.
Well, first of all, the size of the state, it may matter. I mean, we know that there are examples from the past where the state has played a particularly big role in supporting economic growth, mostly, frankly, during wartime. We know that the state's played a particularly big role in the vaccine rollout over the course of the last few months, so there's no doubt the state can play a significant role. My bigger worry is actually that the constant sort of monetary stimulus dependence that we're now all on actually is preventing the kind of supply-side reforms from coming through that ultimately deliver decent economic growth. So we've kind of ended up with a deal that says we'll try to limit the near-term fallout from the various shocks we've had over the last few years in exchange for a less efficiently functioning capital market. We'll be much more dependent on these kinds of monetary painkillers, which have made things a little easier than would otherwise be the case. But we've hidden behind those painkillers and not delivered the kind of productivity gains that we really want to be able to see.
And you're the second guest, Stephen, who's mentioned in their notes this morning population aging as one of the sort of more medium-term or longer-term issues that developed markets need to deal with. One of our guests in our last hour was talking about how aging is going to be inflationary by pushing up wages. What is your perspective on that population aging, and how are you factoring that into your analysis?
Well, there are certainly a lot of very high-powered economists who do worry about the impact of demographics and possibly creating inflation. But the one word I'd throw back at them is Japan, because Japan's been through this over the last 20 or 30 years, rapidly aging population. Where's the inflation? There's none. And of course, you can deal with the rapidly aging population either by inflating away the value of existing assets, or you can end up with a depreciation of these existing assets through falls in equity prices and so on. Japan's gone through the latter experience. It's not been a story of rapid inflation, it's been a story of rapid asset price deflation over the last 20 or 30 years. I think the argument that says that demographics guarantees destiny when it comes to inflation, I don't think it stacks up quite so well after all.
Stephen, thanks very much for your time. Good to speak to you. Stephen King, HSBC Senior Economic Advisor. Stephen will be continuing his conversation with us on Bloomberg Radio. That's at 9 a.m. UK time. Coming up here on the European Market Open, though, we talk about geopolitics. World leaders are warning of consequences if Russian opposition leader Alexei Navalny dies in prison amid a 3-week hunger strike. We get the latest next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the European Market Open. This Monday morning, then, 21 minutes into our European trading session, the FTSE 100 underperforms just a little. Elsewhere, modest gains for European equity markets. Now to bring a Bloomberg special report to your attention. The European Investment Bank is the world's largest multilateral lender. It distributes billions of euros for development projects like social cohesion and gender equality. But behind the EIB's shiny exterior, a new Bloomberg investigation reveals another darker story. Our reporting has uncovered accusations of sexual harassment, bullying and discrimination. You can read more from this Bloomberg Big Take story on Bloomberg.com and on the terminal. Back to one of our top stories this morning. To Russia, and world leaders are promising retaliation if opposition leader Alexei Navalny dies in prison. Navalny, who survived a poisoning last year, is in the 3rd week of a hunger strike while being imprisoned just outside Moscow. His team says he needs urgent medical care, which he is being denied. With us is Bloomberg's Moscow bureau chief, Tori Clark. Good morning to you, Tori. So what is the Biden administration saying about Alexei Navalny and his plight?
The U.S. administration has warned Russia of severe consequences if jailed opposition leader Alexei Navalny dies. He's on a hunger strike, has been for almost 3 weeks now, and his allies say he's weakening rapidly. His life may be in danger. And the U.S. has spoken. President Biden has spoken to President Putin and has warned that this would not be taken well.
And this all comes in the context of the sanctions we were talking about last week, extended by the US towards Russia, as well as the offer of a meeting there, of course. What are the Europeans saying? Europe, for a long time, has been arguing that Navalny should be released, I understand.
Yes, European leaders have, as well as the U.S. Administration, have called for better medical attention to allow Alexei Navalny to see his doctors. That is the reason he went on a hunger strike. This all does come in the context of greater sanctions. The U.S. Just recently announced a new raft of sanctions over hacking and election interference, and as we've reported, they have another whole list of measures they could take. The EU has also put sanctions in place, and they are looking at the use of chemical weapons in the poisoning last year.
And how has the Russian government responded? How has President Putin responded? We were hearing in the last hour that Russian rulers don't generally like to talk about the opposition leader by name. What has been said?
Yes, you're right. The Kremlin has tended to avoid naming Alexei Navalny, referring to him as the blogger or the patient. There's been a degree of, an attempt to have some plausible deniability by saying the legal cases brought against Navalny are, a matter for the courts, by denying any kind of, implication in the actual poisoning, which the U.S. administration has blamed squarely on the Russian intelligence services. But allies of the Kremlin have, spoken out very strongly against U.S. and European measures, or, as they say, interference, saying that, that it's an attempt by the West to keep Russia from being a strong state. Saying that the sanctions are economic warfare, an attempt to weaken Russia. And so they have been sort of the mouthpiece for a lot of the talk about this.
Tori, thanks very much. Thanks for bringing us up to date. Tori Clark, Bloomberg's Moscow bureau chief, with the latest on Alexei Navalny and the response there from the Kremlin as well. Just a quick check on what's going on something completely different, on football. A radical breakaway league being planned for Europe. How are some of the companies that are listed here in Europe, some of the football companies that are listed, responding to the news? Juventus, which would be one of those that would break away, up by more than 6%. Also seeing some of the names that would not be included in this breakaway league moving to the upside this morning amongst those football listed clubs. So that is interesting, perhaps in itself. 8:26 here in London. We should tell you that we're going to be speaking to a number of big names from an aviation festival coming up this week. Plenty of big names from the world of aviation, including the CEO of EasyJet and the CEO of Air France KLM. Those conversations coming up later this week. This is Bloomberg.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric.
Last year, Norway became the first country in the world to sell more electric cars than any other.
In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is said to be a central issue.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open this Monday morning, 30 minutes into your Monday session, and European equity markets making very modest gains this morning. Some of the best gains coming through from the Paris market. We're trying to wrestle with a number of competing factors. We certainly have concerns around the virus and the level of cases that we're seeing, in particular in India and Brazil and certain hotspots, and the emergence of new variants being talked about a lot. On the other hand, we're also near records on global stock markets, and so that is having an impact as well. We see a little bit of haven bid as well, haven demand coming through, certainly in FX markets. That's been part of the story around the yen. So there's a lot of competing themes as we get into another week of trading. Let's have a look at the sector breakdown and see where we are on the GRR, show you that European equity market. So overall, not moving all that far to the upside, but in terms of the moves we do have, it does seem as if many of these sectors are in positive territory, including travel and leisure to the upside. So if a global theme of concern is around a lack of vaccination rollouts and the spread of the virus, then that doesn't seem to be the dominant trading theme here in Europe, at least, where travel and leisure stocks up by 0.6%. Food, beverage and tobacco, energy and banks, the only three sectors in negative territory. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Global coronavirus cases have hit a weekly record. Despite the ongoing vaccine rollouts, there have been more than 5.2 million infections in the last 7 days, more than any other week since the pandemic began. And the outbreaks are accelerating in many countries that are ill-equipped to deal with them. It's casting doubt on hope that the end of the pandemic is in sight. A group of the world's richest football clubs, including Man United and Real Madrid, have announced plans for a European breakaway league. The new competition would be an alternative to the UEFA Champions League, with a mostly fixed roster of some of the biggest names. But national leagues are hitting back, saying those who take part could be banned from domestic competitions and the World Cup. The UK government is bracing for more fallout from the Greensill lobbying scandal. Multiple parliamentary committees are due to start probes. The controversy initially centred on former Prime Minister David Cameron's lobbying on behalf of ministers of the now collapsed Greensill company. It's since widened to revelations of a revolving door between business and government. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura Wright here in London. Now, it's shaping up to be a big week on the green agenda. The US and China say they will cooperate to tackle climate change. Later this week, it's Earth Day, with US President Joe Biden expected to announce aggressive targets to cut greenhouse gas emissions. He'll also host a virtual climate summit with world leaders. Ahead of that summit, Bloomberg's Maria Tadeo is joined by a guest to get a European perspective in the Brussels edition. Maria.
Yes, good morning, Anna. We're now joined by Pascal Canfin, who is a member of the European Parliament, but he's also the chair of the Environment Committee for the European Parliament. And you have put out a petition, well, it's signed by 100 names here, including the CEOs of Iberdrola, E.ON, and Danel, so some big names there, in which you say we need to push and continue to push for all those climate measures. But before we move into the details of that, I want to get your reaction on that statement yesterday by China and the United States. It took some by surprise. What do you make of it?
Well, I mean, everything which goes into the right direction is welcome. And on climate, regarding the cooperation between China, the US, and the EU, I mean, we have to make sure that we more or less protect climate action and climate cooperation from the rest of the disagreements we will have, and we are going to keep on having with China on Taiwan, on Hong Kong, on human rights, on Uyghur, and so on and so on and so on. We know that China is a strategic rival, as we say in the EU and you say in the US. But on climate action, either we are on the same boat. Either we win together or we lose together. So that's why we have to make sure that we draw a line between everything on which we disagree, and we strongly disagree, and the fact that we're still cooperating on climate action, the three of us, EU, US, and China, because when you put all the three together, we are more than half of the global emissions.
And that's clear, but I wonder, when you look at the Chinese and their pledge to be much more sustainable and to care more about the environment, just a few days ago, there were a number of reports coming out of China suggesting that the Chinese government does not believe in the cross-border tax leakage, potential tax that may come out of the European Union, and that they view that as problematic. So how much do you trust the Chinese? Because I guess nice words are great, but when you look at the action, perhaps there's reasons to be concerned.
Exactly. So when I look at the long-term goal, now it's a good long-term goal, the climate neutrality by 2060, which is very close to our own goal in the EU and the US goal, climate neutrality in 2050. So we are aligned long-term, but you're right. Short-term, when I look at the new 5 years plan, clearly it's not aligned with the trajectory China should pursue to start aligning itself to something which is in line with the Paris Agreement. So you're right. Long-term, China is on the right track. Short-term, definitely not. Then when it comes to the border adjustment mechanism, I will be one of the negotiators of this mechanism for the European Union. The European law, will be put on the table by European Commission in June, in 2 months' time. And we will not derail. We will not derail, but I want to insist that it will be WTO, so World Trade Organization, compatible. The red line for the EU and for the member states countries would be to design a mechanism that wouldn't be WTO compatible. Because if it's not WTO compatible, it means that it's a sort of trade war, discriminatory, and then not uncooperative on climate, which is exactly the opposite of what we want. What we want is to make sure that when we have a 50 euros carbon price, we still compete with importers that do not pay at home any dollar or any euro on the carbon.
Right, and you say that levy is going to be presented in 2 months' time, and I know you can't get into details, I guess, at this point, but for investors, it's really crucial to know what rate. Can you give us an idea as to what numbers we're looking at briefly?
For the mechanism, so the maximum scope will be the scope covered by the European Trade Scheme, so the European carbon market. So electricity, aluminium, steel, glass, paper, and so on. So the highly carbon intensive industries. That's the maximum scope. And we might start with a number of sectors that are most at risk. When I say at risk, means that if these sectors start paying 40, 50, 60 euros per ton of carbon. And actually today, the carbon market price, as you might know, is over 40. So it's already something that matters. But if we move to 50 and 60, then they can't compete anymore. It's as simple as that. They can't compete anymore with importers that would pay zero on carbon. And we, as Europeans, we are serious with climate and we are serious with our industrial base. So that's why we are going to put this levy,
sure
not to be protectionism, but just to have a level playing field.
And I'm sure European companies would agree that they don't want to be disadvantaged over this. Pascal Canfin, thank you so much for your time as always on Bloomberg. We appreciate you coming on the show. We'll speak to you very soon when that border levy is implemented by the Commission in June. Thank you so much for joining us. Anna.
Maria, thank you. Maria Tadeo bringing us that interesting conversation around the climate agenda. Certainly one to watch this week. Now, incoming Credit Suisse chair Antonio Horta Osorio will have his hands full when he takes on the new role next month. The Swiss lender is looking to move on from one of its most turbulent years in history following the Greensill and Archegos scandals. Guiding the bank through a post-pandemic and post-Brexit future will also be among his top priorities. He spoke exclusively to Bloomberg's Francine Lacroix last month.
I thought I would like to do something different in terms of function. After 10 years and 3 strategic plans at Lloyds, I have now been a CEO in different countries for the last 28 years. I have been CEO in Portugal, in Brazil, in the UK previously, now at Lloyds, and I have acquired, managed or turned around different banks. And I thought that people should not try to self-perpetuate themselves in positions. It's good for companies to have a fresh perspective, and it's good for people to also have new challenges, because you should continuously try to face new challenges, try to improve. Otherwise, you just start to decay. From September onwards, I start seeing several alternatives. And when the Credit Suisse opportunity came, I thought it was really interesting because it's a chairman role. So I think it builds very well on my previous experience and on my capabilities. It's a very international bank, and all my background, as you know, is very international as well. It's a different business model to Lloyds, which is interesting. So it's different. I have not worked in those segments for the last 15 years, but I have worked a lot in many of those segments in the previous 15 years. And Switzerland is a great country. I think Credit Suisse has a great franchise, and therefore I'm looking to help them and work together with the board and the executive team to make it better and better, as I did with the team here at Lloyds. One should always try to create a great team with the same values as I was telling you, sharing the same culture, with diversity of thought, so that you really weigh pros and cons when you take decisions. And then once you decide direction, you should, as a team, go relentlessly in that direction, quicker than peers, which is what creates competitive advantage. That's what I'm looking forward to do with the board of Credit Suisse and the executive board, the executive team going forward.
That was the incoming Credit Suisse chair, Antonio Horta Osorio, speaking with Bloomberg's Francine Lacroix in an exclusive interview. Coming up here on the European Market Open, we take a look at the UK fintech space and how the sector has opened up to women and underrepresented founders. That conversation coming up next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
European market open. We are 44 minutes into your European equity trading session. Things looking flat to positive for European equity markets. A bit of upside coming through on the CAC 40. We've seen an upgrade to some of the luxury names in Paris, and that is helping to push some of those stocks higher. Let's step away from the day-to-day market themes and talk about where we are on fintech. It's become increasingly crucial to our everyday lives, of course, and my next guest says that as opportunities arise in this space, there is more room to invest in companies with diverse and underrepresented founders. Joining us now is June Angelides, Samos Investment Management, or Samos Investments Investment Manager, who will be participating in the UK FinTech Week panel on fundraising and investment later today. June, very good to speak to you then on the occasion of this UK FinTech Week. What is going to be the key message then that you're looking to communicate at this event?
Yeah, it's a great pleasure to be here, Anna. For me, I am really focusing on sort of the missed opportunity with investing more in female founders. Looking at the stats in 2020, just 17% of investment went into fintech, which were founded by female founders. And I think, there's so much success to be celebrated in Anne Boden raising sort of a bumper round recently, and also, we've also seen PensionBee listing on the IPO. So we can see that there are great women doing great things out there, but how can we make sure that more investment is looked at, and how do we get more diversity at the table in terms of investors?
You received an MBE, June, for your services to women in technology, founding the company Mums in Tech. So you speak with plenty of experience when it comes to trying to get investment into your business. And you've also talked about how it is sometimes difficult when you're a woman to get investors to take your business plan seriously, for example, and for other underrepresented groups in fintech. When did you start to realize that this wasn't just that people weren't interested in ideas? It was that there are structural impediments to founders such as yourself trying to get money into a business?
Yeah, I just feel that, when I was out there looking at raising investment for Mums in Tech, I just felt that the bar was maybe a little bit higher, maybe there was a bit of unconscious bias in the room. And again, at that point, we didn't really see many women at partner level at firms. So sometimes, for a social enterprise like Mums in Tech, it was very difficult to get the message across as to why it was important to upskill women and get more women interested in technology. It just didn't seem to hit the button for a lot of the investors we spoke to. But I hope it's changing. I think there's a lot more accountability, and we're seeing some fantastic female founders out there raising investment right now.
And June, when you look at the types of fintech business that you support, clearly you like the ones you like and you put money into the ones that you choose. But broadly speaking, across the sector, do you think there's a lot of sameness? Are there a lot of people trying to chase the same ideas, just trying to get around big banks, essentially? I mean, I look at, there's so many payments businesses at the moment. I'm sure all of that range of businesses, it helps in some senses. But is there too much? Do we need to see consolidation?
Yeah, I wonder, that is such a good point. The reality is we need that competition, and some might say there's sameness, but I think at the end of the day, it forces everyone to keep getting better. And I think that's really important. Obviously, we're invested across the board. I guess most notably Moneybox and Curve are one of our investments. And I think it's important that we have competition so that they continue to stay nimble and serve the customer as best they can.
June, you must have been doing a lot of meeting of entrepreneurs, screening entrepreneurs, trying to get to understand them, to get to know them over Zoom and other streaming platforms during the pandemic. What have you learned about the best way to try and get people's attention doing that? Because this must be a daunting experience to those who are not used to having to present on a screen.
Yeah, I think, just keeping them comfortable. I guess the reality is a lot of us have experienced Zoom bombing. So very often my kids would turn up on the Zoom call. It's helping them get comfortable quickly. Obviously, as investors, we're looking for more data points. So we sort of level the playing field and let them know, we're all in this together. It's new for us. But at the end of the day, we spend more time with them. We do a bit more reference checking. And I think for me, it was very important to make myself more accessible, whether it be opening my DMs on Twitter, or just putting out my email out there so that people knew that they could reach me. So I think overall, it's been a great experience. I think it's normalized investors as humans, and then that's something that I'm very proud of doing.
That's a really interesting perspective. June, thanks very much for joining us. Good to speak to you. Good luck with Tech Week, FinTech Week. June Angelidis, Samos Investments Investment Manager. Coming up here on the European Market Open, searching for direction. European markets await a fresh catalyst. We look at some of the possible drivers for the markets this week with Market Live's Laura Cooper. She's up next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 52 minutes into your European trading session, making modest gains on European equity markets. Laura Cooper, Bloomberg's Markets Live macro strategist here in London, joins us now with analysis of where we are on these markets. And Laura, apart from some news flow surrounding football, it seems that we're kind of stuck in last week. We're still dealing with a lot of the similar themes, a bit more geopolitics perhaps sprinkled on the top, but we're really looking for some direction here.
Well, and that certainly does appear to be the case. You know, you can really look at a number of different narratives across markets and try to pin price action to those. So it's unclear at this point really what could be that catalyst for stocks this week. We do have that crypto crash over the weekend. We do have rising global virus counts that actually reached another record. And so I really think at this point it's crucial to see, you know, yes, actually the path of least resistance for stocks does appear to be higher. We are seeing bonds on the back foot, really in this period of consolidation. But I think it's probably too soon to kind of have the all clear because there are a number of potential catalysts ahead this week.
Yeah, and thinking about some of those catalysts, of course, earnings season has already started. We heard from a number of big US banks last week. And I know the question of the day you've been asking on the Markets Live blog is how strong an earnings season is already priced in. With equity markets in certain parts of the world not far from record highs, you have to wonder what is expected of this earnings report.
Well, and a lot of good news, I think, is baked into those earnings expectations. So if we look at the S&P 500 in the U.S., those EPS year-on-year estimates are actually expected to come in about 5 times what they've averaged over the past decade. So crucially this week, it will be all about tech. We do have Netflix kicking it off. And I think beyond the numbers that we get from these companies, it will be around guidance, particularly on the inflation front. So Bloomberg Intelligence actually came out with a report that said inflation was mentioned about 817 times over the past 3 weeks from these companies. And that could eat into those margin forecasts. And as well, we do have potential tax hikes coming through the U.S. So that will be another point to watch where that could really be a direction for price action beyond kind of the headline numbers that do come out.
Yeah, that's something to watch. I mentioned a little bit of geopolitical risk, and that had been something that was driving investors into the dollar. It is something that's still driving investors into the yen, it seems. But the dollar overall looking pretty weak, actually, in the euro now at 120, taking out that 120 level, 120.16. And the dollar more broadly, both of the dollar index, the DXY and the Bloomberg dollar index, both down around 0.3%. So what is dominating thinking in FX land?
Well, that's actually been quite an interesting price action this morning because when I came in, the dollar was relatively steady. We did have the euro on the back foot. So it's been quite a turnaround this morning. Now, cable is gaining traction. So there's really not a clear read across in terms of the dollar. But I do think that with yields kind of in this consolidation period after what we saw last week, the dollar is potentially going to struggle for an upside catalyst. So I do think, you know, given a dearth of U.S. data, the Fed is in quiet period, the dollar could potentially take cues from what's happening externally, potentially from what's happening in Europe this week.
And when it comes to cryptos, Laura, you know, move over Bitcoin, move over Ethereum, we're all about the altcoins, it seems, right now.
And that certainly does appear to be the case, just the fact that we have seen the global value of these coins top 225 trillion. And so that does allude to the fact that this euphoria has probably gotten a bit too ahead of itself. We did see that Bitcoin crash over the weekend. Some others came under pressure as well. And I just think that that brings back to the radar that, yes, this is quite a volatile asset. We don't yet know really what the steady equilibrium rate is. So I think it's certainly something to watch in the week ahead, notably as it could have ripple effects to the tech sector because we know that those two are now linked because of what we saw last week.
Yeah, the value of all coins surging past $2.25 trillion, a bit of frenzy of demand. That was certainly one of the stories we were covering last week. And the weekend looked pretty different, didn't it? Laura, thanks very much. Laura Cooper, Bloomberg's Markets Live macro strategist. Thank you for joining us. That is it for the European Market Open. Surveillance Early Edition is up next. They'll be sure to take you through all of those really interesting late moves, recent moves in FX markets. They're certainly to the fore. European equity markets looking a little calmer, making modest gains as the sun really is shining across London. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Lots of young people in the Reddit chat rooms that love Doge. It doesn't really have a purpose.
There will be consequences if Mr. Navalny dies.
Credit Suisse has a great franchise, and therefore I'm looking to make it better and better.
This is Bloomberg Surveillance, Early Edition with Francine Lacroix.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 19th of April. I'm Francine Lacroix in London, and here's what's coming up on today's program. Global coronavirus infections reach a weekly record, with India and Brazil hitting hard. At the same time, the U.S. passes a 50% mark for the first doses of vaccine administered. The latest bout of cryptomania takes a breather, while Bitcoin slumps over the weekend after touching an all-time high of almost $65,000. And 12 football clubs in England, Spain, and Italy put forward their proposal for a European Super League, funded in part by $6 billion of debt from JP Morgan. There's quite a lot going on in the markets. The mania that drove cryptocurrency assets to a record ran out of steam over the weekend. Now, Bitcoin plunged as much as 15% on Sunday before paring losses to trade around $57,000. Now, that's likely to have an impact on Coinbase, the crypto exchange whose listing propelled last week's surge in digital currencies. The one bright spot in the crypto world is the highly resilient Dogecoin, a token named after a meme of a Shiba Inu. Now let's get more with Danny Berger. Danny, we finally know how to pronounce it, but how's the crypto space actually looking this morning?
Francine, well, I'm so upset because Dogecoin isn't on the terminal, which, okay, it makes total sense. There are so many different cryptos. There's sushi, there's kimchi. I really can't keep up with which ones are jokes or not, but those jokes ones are not listed on the terminal. What is, of course, though, is Bitcoin. And look, you can see so far this morning, we are starting to make up some of those losses, but we're still down 12% from the record high of yesterday, and that big 15% plunge having a big impact as to where we're sitting. Now, as always with cryptos, it is a grab bag of reasons of why it might have moved. You have regulatory concerns. You have the Turkish bank saying that they're going to ban crypto as payments. You have online talk of perhaps some U.S. Treasury action over targeting issues of money laundering through crypto. But either way, the entirety of the crypto space starts to fall, of course, save for Dogecoin, the classic safe haven of the crypto space, apparently. These are the prices from Friday close. So over the weekend, some big losses. But I should say, Francine, Bitcoin is still still up 93% this year. Ether is still up 200% this year. We know Bitcoin is volatile, so these momentary lapses don't necessarily undo what we've seen because, again, it is normal for these big sort of moves. Now, I want to see if we have a pre-market read on Coinbase, of course, because part of the euphoria last week was about the hype for this debut. It is off so far this morning, down nearly 3%. So this is one we're going to want to keep our eye on because, of course, Coinbase doesn't trade over the weekend. But if some of that crypto euphoria is coming out of the market, this is certainly a stock that's going to be affected, Francine.
Thank you so much, our Danny Berger. And I was also reminded that there was a coin with the face of Kanye West called Kanye, but then he tried to sue it, so that got shut down. Now, plans for new European Super League have been unveiled. Arsenal, Chelsea, Liverpool, Man City, Man U, and Spurs, the Premier League's Big Six, agreed to join a new midweek competition. Now, in a groundbreaking move for club soccer, club football, the English teams would join other European titans such as AC Milan, Atletico Madrid, Barcelona, Inter Milan, Juventus, and Real Madrid. Now, the founding members say they will carry on playing their domestic competitions, but the move has also been condemned by the major leagues and international soccer bodies. Now, Champions League organizers UEFA have said it will use all measures to, quote, stop the cynical project. Premier League has also said that the plans attack the principle of open competition. I think Juventus, though, was up some 10% on the back of it. Well, joining us now is our Bloomberg stocks reporter, Chelsea fan as well, Joe Easton. Joe, I mean, you know, this broke yesterday. I know it was kind of simmering in the backwaters, but the idea behind the competition is basically you get an elite team, you make a lot of money, but it would cut out people. And I have to say, Twitter is on fire.
Yes, good morning. So that's right. So really, it would look to kind of push the top end of the revenue streams of global soccer towards these elite teams, those 12 teams that you mentioned there, potentially expanding later to 15 teams. So the big concern really is that it's just going to increase the dominance of those top teams with the greater spending power that they'll have in terms of players through the broadcasting revenue from the new league, and essentially just consolidate the power at those top teams and leaving the smaller and even mid-level teams behind as this Super League progresses. So there is a lot of concern, and we've seen governments, we've seen big names in the sport all coming out against it this morning. But it's potentially maybe just a kind of marker in the sand for the Super League, putting out kind of its best case in terms of what it wants to happen. And then there could then be a negotiation from here, and we end up with something slightly less extreme. But at the moment, as you say, the backlash has been pretty intense this morning.
So, Joe, who's pushing for the competition? I mean, I'm not a huge sports or football fan, but actually it's nice to think that a complete underdog can actually win a big title if they have a great team and don't have that much money. So it would really go against that spirit. Is it only the rich, wealthy guys or wealthy clubs that would be part of this European Super League that wanted to go ahead?
Yeah, I mean, essentially it would just be those top wealthiest teams, and that's where there's so much cynicism around it this morning. So you have the chairman Agnelli at Juventus. He would be one of the vice chairmen of the new league. And then you have the top executives at Manchester United and Real Madrid also involved. So it really is the top wealthy teams pushing for it. There isn't really much benefit that you can see for the broader level of football, for the mid-level teams. We've seen these success stories over the years with teams like Leicester City and smaller clubs winning top competitions. And there is definitely concern that pushing this kind of sales and revenue towards these teams, away from the lower level teams, would reduce the opportunities that clubs have to buy top players and essentially, like I said, consolidate the power at the top among the top teams. So there is a lot of concern around the balance of power in the sport following this news.
I mean, Leicester was amazing. I have to say, my football crazy producers reminded me again, they were a 500-1 win at the start of that season. What's been the market reaction, Joe? I mean, if you look at Juventus, it was gaining some 10%. But then we're hearing, so if you're a player in one of these super leagues, then you can't even play, apparently, for your own national team. So is it going to deter, big players to sign up?
Yeah, well, that's definitely one risk to it. But as I mentioned, I think it's kind of the both sides are putting their sort of positions out in terms of negotiating and putting their bargaining power on the table, putting their chips on the table in terms of what power they have. So UEFA and the leagues, they can enforce their own, potentially bans on players. I mean, there'd be a big legal process around anything like that. It would probably take a very long time to go through the legal system there. In terms of the actual reaction this morning, as you mentioned, we saw Juventus jumped around 10%. It's come down a little bit now. We also saw, interestingly, BT, which broadcast the Champions League, they fell a little bit in early trading, down around half a percentage point, but down more than the broader market. So this competition potentially threatening the dominance and the importance of the Champions League, although it would most likely continue alongside the Super League. We've also been looking at shares of the other big teams in Europe that are listed, Ajax and Borussia Dortmund. They're not part of the 12 teams, so potentially a negative impact for them. But those shares are pretty stable at the moment. The big mover, though, has been Juventus. Worth bearing in mind that the Juventus stock is still down almost 35% since the beginning of last year because of the coronavirus not having fans in stadiums. So they are coming off a low base, but it was a significant move of around 10% for Juventus this morning.
Joe, thanks so much. Joe Easton there, Bloomberg Stocks Report. And also check out, Joe has a wonderful 5 top stories on the Bloomberg, so you can sign up to his newsletters either on the terminal or also you can do it on the website. Now, coming up on Unequal Impact, the U.S. hits 50% of adults vaccinated as the pandemic continues to rage in India and Brazil. We'll discuss the market implications with JP Morgan's Grace Peters. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The US is warning Russia of consequences if jail's opposition leader Alexei Navalny dies. He's in the 3rd week of a hunger strike. Allies say his condition is critical and could die within days. He was in prison for breaking parole rules after going to Germany. That was to recover from a near-fatal poisoning that he and the West blame on the Kremlin. Russia does deny any involvement. Now, the US and China say they are committed to cooperating on climate change and they're implementing the Paris Agreement. The joint statement comes amid growing tensions between the two countries on issues ranging from trade to human rights abuses. US President Joe Biden is hosting a virtual climate conference this week that Dow Jones reports President Xi will be joining. Now, the UK government is bracing for more fallout from the Greensill lobbying scandal. Multiple parliamentary committees are due to start probes. The controversy initially centred on former Prime Minister David Cameron's lobbying of ministers on behalf of the now-collapsed company. It has since widened to revelations of a revolving door between business and the government. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Both in pink for the arrival of spring. Now, global coronavirus cases have hit a weekly record. There have been more than 5.2 million infections in the last 7 days, more than any other week since the pandemic began. While America has vaccinated half of all of its adult population with at least one shot, the pandemic is worsening in India, Brazil, and elsewhere. That divide is also visible in global stocks. So while European markets start the week with tempered optimism, Indian stocks are down as much as 3%. Well, joining us now is Grace Peters, JP Morgan Private Bank EMEA Head of Investment Strategy. Thank you so much, Grace, for coming on. Always such a pleasure to have you on Bloomberg Surveillance, the early edition. When you look, Grace, at whatever we'll face in the next couple of months and weeks, how much volatility will we see given the confluence of many people are getting vaccinated, but it's unclear how we get a full handle on COVID-19?
Now, the first quarter was really all about the speed of the recovery, and we saw that play out in rising risk sentiment, upgrades to global growth, rising 10-year yields, and equity markets doing pretty well now some 11% on the year. As we look forward into the second quarter, which is really when much of this reopening is about to take place, we have to look very closely at divergences that have appeared over the last 12 months, and those rotations that are going to continue to take place and will really shape financial markets. So when we think about that by sector, we're thinking particularly around the divergence that we've seen between goods and services. And as this reopening takes place, we're convinced that the services component is going to bounce back very strongly from here across the developed world, primarily the US leading with the UK, followed by Europe in the third quarter. So that's an area of rotation that we're really focused on. But also geographically, when we think about the two largest economies in the world, US and China, their relative position is going to switch henceforth. China obviously being first in, first out, but now the US really powering forward and being the key driver of global growth as these fiscal spending measures that we've seen coming through the end of last year really power the economy open amid the reopening. So all of that, when you put that together, leads us to believe that you're now at the stage that you're transitioning from early to a more mid-cycle investment horizon. That means that we remain pro-cyclical, we continue to advocate taking risk, but you do have to be more balanced in your perspective. You have to use volatility to invest and obviously keep the hunt for yield going, and we're using alternative assets more and able to facilitate that.
Grace, how do you take advantage of investing in Europe? And actually, what do you say to the ones that say that think that forecasts for earnings are just too high given the uncertainties ahead?
Europe is really one of the last regions where you can still find cyclicality at a discount. And obviously, when we think about what we've been doing in portfolios and really across the market, it's been taking shape as well. Investors have been looking to add cyclicality and inflation beneficiaries. And Europe is a region when it comes to the reopening trade that really is front and center. We think Europe's reopening is going to take place through the second quarter, probably more vigorously in the third quarter. And driven primarily by consumer health and pent-up demand. But when we think about valuation of European equities, despite the fact that actually European equities have this cyclical flavor, are typically correlated to rising US Treasury yields, Europe has lagged since the bottom of the pandemic and is often still underweight in portfolios. So what we expect to happen and what we think is starting to happen just in the last few months is that Europe is being closed and taken back up to a neutral weight weighting. We are reticent to say whether Europe will become an overweight weighting in portfolios at large, because once we're through the next couple of quarters and this very strong rebound that we expect to take place, we still think that the secular growth story for Europe isn't as attractive as we would see it in the US or Asia. So we do think that the rotation towards European equities can continue for another couple of quarters, but we still think that over the longer term, you want to be looking to the US, to Asia, and to mega trends when you're thinking about secular growth.
And Grace, in this kind of environment, so what happens to dollar? Does it actually go higher? And does it mean that there could be appetite for some of the emerging markets?
Yeah, I think when we think about the pro-cyclical rotation that we're seeing across asset classes, equities, we've discussed fixed income the same, and commodities as well. The thing that stands out when we think about divergence, but amongst asset classes, is actually the dollar is slightly bucking the trend here. After seeing quite significant dollar weakness through the second half of last year, we're seeing the dollar stabilize. And I think what's really changed here is the growth differential. Because of the US fiscal stimulus that's come through, that growth differential supporting the US, driving global growth forward here, actually means that the dollar feels reasonably well supported. So we've neutralized our dollar view. We think the dollar, roughly speaking, against G10 is flat from here, and that is obviously something then that has implications when we think primarily for emerging markets, to some extent to commodities, that you don't have the dollar, which is undoubtedly a tailwind when it comes to investing in broad emerging market equities. We still think that emerging markets have a place in portfolios. We're particularly constructive on China, arguably for the longer term growth trajectory rather than for the next couple of quarters. But we think that cyclical rebound will eventually make its way to emerging markets ex-China, but it's probably a story that will play out through the second half of the year rather than specifically through the next quarter, where I think the focus is very much going to be corporate earnings in the developed world, and whether we start to see that bounce back really coming through as the economic data suggests.
Grace, thank you so much. Grace Peters, JP Morgan at Private Bank MEA, Head of Investment Strategy. Too short a time, so we'll have to get you back on really soon. Now, coming up, a tough task. The outgoing Lloyd's Chief Executive, Antonio Horta Osorio, faces another case of crisis management as he prepares for his next role, the chairman of Credit Suisse. That interview coming up next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, the incoming Credit Suisse chair, Antonio Horta Osorio, will have his hands full when he takes on the role next month. The Swiss lender is looking to move on from one of the most turbulent years in history following the Greensill and Archegos scandal. Now, I spoke to the outgoing boss of Lloyd's exclusively last month.
I thought I would like to do something different in terms of function. After 10 years and 3 strategic plans at Lloyd's, I have now been a CEO in different countries for the last 28 years. I have been CEO in Portugal, in Brazil, in the UK previously, now at Lloyd's, and I have acquired, managed or turned around different banks. And I thought that people should not try to self-perpetuate themselves in positions. It's good for companies to have a fresh perspective, and it's good for people to also have new challenges, because you should continuously try to face new challenges, try to improve. Otherwise, you just start to decay. From September onwards, I start seeing several alternatives. And when the Credit Suisse opportunity came, I thought it was really interesting because it's a chairman role. So I think it builds very well on my previous experience and on my capabilities. It's a very international bank, and all my background, as you know, is very international as well. It's a different business model to Lloyd's, which is interesting. So it's different. I have not worked in those segments for the last 15 years, but I have worked a lot in many of those segments in the previous 15 years. And Switzerland is a great country. I think Credit Suisse has a great franchise, and therefore I'm looking to help them and work together with the board and the executive team to make it better and better, as I did with the team here at Lloyd's. One should always try to create a great team with the same values as I was telling you, sharing the same culture, with diversity of thought, so that you really weigh pros and cons when you take decisions. And then once you decide direction, you should, as a team, go relentlessly in that direction, quicker than peers, which is what creates competitive advantage. That's what I'm looking forward to do with the board of Credit Suisse and the executive board, the executive team going forward.
My interview there with the outgoing Lloyd's chief executive, Antonio Horta Osorio. I have to say this was before the Archegos scandal, and he was pretty tight-lipped about Credit Suisse, not wanting to talk about Credit Suisse before he actually got there. We did spend a bit of time, though, talking about his time at Lloyd's, 3 restructuring, 10 years in charge, the longest-standing chief executive of a British bank. Now, England's Big Six agreed to join a European Super League. Up next, we discuss the world of football. This is Bloomberg.
Is there anything you think the Fed should be able to do to help people who are really suffering in the pandemic?
I think they need to be in the room with us as we make our decisions about monetary policy.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
While global coronavirus infections reach a weekly record with India and Brazil hit hard at the same time, the USA passes the 50% mark for the first doses of vaccine administered. The latest bout of cryptomania takes a breather while Bitcoin slumps over the weekend after touching an all-time high of almost $65,000. And 12 football clubs in England, Spain and Italy put forward their proposal for a European Super League funded in part by $6 billion of debt from JP Morgan. Well, good morning, everyone. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance, the early edition on Monday, the 19th of April. I'm very excited about Bitcoin. I'm very excited about football. And then we have a great guest who also talks about NFTs. So we're all over the new trends. Now, more on that third story. Plans for a new European Super League have been unveiled. Arsenal, Chelsea, Liverpool, Man City, Man United and Spurs, while the Premier League's Big Six agreed to join a new midweek competition. Now, in a groundbreaking move for club football, the English teams would join other European titans such as AC Milan, Atletico Madrid, Barcelona, Inter Milan, Juventus and Real Madrid. Now, the founding members say they will carry on playing their domestic competitions, but the move has been condemned by the major leagues and international soccer bodies. Well, Champions League organizer UEFA have said it will use all measures to stop the, quote, cynical project. And the Premier League has said that the plans attack the principles of open competition. Well, joining us now is our Bloomberg Stocks reporter, Chelsea fan as well, Joe Easton. Joe, first of all, just as a fan, and I've seen Twitter, we've had numerous discussions in the newsroom, and people are up in arms, and actually quite a fair on Reddit and Twitter have said they will renounce their club if they join this. Just as one of the mega fans of football in our newsroom, what was your first reaction to this?
Yes, good morning. Well, I mean, as you mentioned, I am a Chelsea fan, so there was that angle to it, given that Chelsea are one of the teams. But generally, I think it's something that's been coming for quite a while in terms of how long it's been speculated for. But the news, it came as a very sudden surprise in terms of how the news broke, with UEFA actually releasing a statement criticising it before the clubs had actually announced the proposal themselves. So I think in terms of the fans' view, it is very much in favour of the top teams. So I mean, I think it even doesn't sit very well with fans of the top sides that think it's going to be unfair on the other teams that they're fond of as well. So I think in terms of the fans, you can see that there's where the backlash comes from, because it basically does consolidate the power of football within the top 12 teams, potentially 15 teams later on. So it doesn't make it a level playing field. It's definitely in favour of the bigger teams. So you can see why fans and even the politicians that we've seen criticising it, you can see where that comes from for sure.
Joe, at the same time, if you look at, for example, Juventus, it was up some 10%. It's a traded company. It's up some 10% in today's trading session. So who actually is pushing the competition? And will it settle somewhere in the middle? Or do you think they'll just go ahead with the plans that we've heard of?
You know, I think there'll definitely be a negotiation from here. I think this is both sides setting out their markers in the sand in terms of what they think they can potentially ask for. And then later we'll have a meeting in the middle where something less extreme will come up. I've just been reading a recent note just out from analysts at Citigroup, which is saying that given the criticism that's been announced, it's easy to perhaps dismiss it and say that it won't actually get off the ground. But then they're also saying that investors need to be looking at the possibility that this does come through. In terms of who's pushing for it, it is really Juventus with the chairman, Andrea Agnelli. He's going to be the vice chairman of the new Super League, and then Manchester United and Real Madrid, very significant influences on this as well. But investors do need to take it seriously. We're also looking, along with the move in Juventus we saw today, we're also looking at BT shares, who they broadcast the Champions League. Citigroup do warn that it could be a negative for the company if this league was to sort of take the shine away from the Champions League, which has been the dominant force for the last few decades now.
Thank you so much, Joe Easton. They're a Bloomberg stocks reporter and massive football fan. Now, the mania that drove cryptocurrencies assets to a record ran out of steam over the weekend. Bitcoin plunging as much as 15% on Sunday before paring losses to trade around $57,000. That's likely to have an impact on Coinbase, the crypto exchange whose listing propelled last week's surge in digital currencies. Well, let's get more with our Danny Berger. Danny, a million names for some of these cryptocurrencies, but they seem a bit more stable after a pretty rocky weekend.
Yeah, they definitely do. And this is typically the thing with cryptocurrencies is we expect volatility. We did see on Sunday, as you mentioned, this big decline on Sunday. It starts to pick up, and we are seeing some gains this morning, about 1.7%. However, that's not really enough to totally make up for this big wipeout. And this affected the entirety of the crypto space, more or less. Over the weekend, it was Bitcoin, it was Ether. They all declined, though I should say Ether's still up 200% since January. Bitcoin at the same time still up 93% since January. So what could have driven this over the weekend? It's always a grab bag when it comes to crypto because there's so many different drivers and a lot of volatility. As I said, it could be fears of regulatory crackdowns. It could be power outages in China, or it could just be coming down from the euphoria of last week. And one of the big drivers of that euphoria was the Coinbase IPO. Coinbase, though, falling pre-market down 3.6%. Of course, it needs to catch up with the weekend's action because, of course, it doesn't trade over the weekend. But we saw Bitcoin hit that record along the time that Coinbase was debuting. Of course, Francine, as we're talking about, the only thing that really seems to have fought off these declines was Dogecoin, which, for full transparency, my sister said she bought some for her dog last week. Not sure how sound of an investment that is, but, you know, her dog must be happy. Not sure.
I'm always worried about, not remembering the password because it actually happened to someone we both know quite well, and he's probably a millionaire and still does not know. Danny Berger, thank you so much. Danny Berger, they're looking at a lot of the crypto moves. Now, to bring a Bloomberg special report to your attention, the European Investment Bank is the world's largest multilateral lender. It distributes billions of euros for development projects like social cohesion and gender equality. But behind the EIB's shiny exterior, a new Bloomberg investigation reveals another darker story. Our reporting has uncovered accusations of sexual harassment, bullying, and discrimination. And you can read more from this Bloomberg Big Take story on Bloomberg.com and on the terminal. Now, coming up, one of Britain's leading infrastructure investors examines how to tackle inequality from the ground up. We speak to the Legal and General Chief Executive, Nigel Wilson, next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacquet here in London. Now, as the UK emerges from the coronavirus pandemic, it brings opportunities to rebuild and reform the economy. The UK's leading infrastructure investor, Legal & General, is focusing on tackling inequality and is calling for urgent action to stop low-income communities being left behind. It's launching the Rebuilding Britain Index to track social and economic progress across the country. Well, joining us now is Nigel Wilson. He's Legal & General Chief Executive. Nigel, thank you so much for joining us. I remember, you spearheading this and you talking about this 3 or 4 years ago, way before we knew about the pandemic and the fact that it would hit us so hard. How much more difficult and how much more important is it to rebuild better now? And what's keeping us back?
Yeah, it's a great question because we've got a Build Back Better program in both the UK and the US, both called the same name as well. And so we started this project to see, are we building back better? Are we levelling up? Are we meeting the needs, economic and social needs of all the different parts of the country? And one of the highlights of the report is that the role and the scale and the challenge facing the Prime Minister and the Chancellor's Build Back Better Council. I didn't realise I was actually going to be on that council when we put all these put the index together and realised that actually it's a really big, difficult job. As you rightly say, we've been doing it on our scale for a number of years, maybe 10 years now, and with a lot of success and a lot of knowledge, I think, of what's required. But we are looking down, the potential of a K-shaped recovery and, huge discrepancies between different parts of the country and all of the data that we have sort of collected slightly anecdotally for a number of years. We're now collecting in a very systematic way and interviewing 20,000 people, getting their personal views. But it's everywhere needs levelling up, and there's problems and issues to be dealt everywhere. And how do you move quickly in these areas? And that's the challenge.
Is the government doing enough? Because I keep on hearing, we're rebuilding better, and actually, in certain ways, the pandemic could be an opportunity to do that. But that's only if it's done right. Do you see that?
Yes.
Is it being done in the correct way so that low-income communities will be better off in 3-4 years, or are they still going to pay for the horrific year that we've had?
Well, at the moment, I think we don't know the answer to that question. We know what the answer should be to that question, that we do make all of the appropriate steps. I mean, it is fair to say that the Prime Minister and the Chancellor are hugely engaged in this, and they've taken some good steps, the Treasury moving to Darlington, the Infrastructure Bank into Leeds, but it isn't at a big enough scale. What we're seeing in the housing market, there's a lot of headlines around prices increasing, but it's really volumes that we need to see increasing at the same time. There's a bit more capital flowing into affordable housing, a bit more flowing into build-to-rent housing, a little bit more in later life living housing, a bit more in manufacturing, particular modular construction, things that we've been working on for a long period of time. But it's not enough right now. I mean, and that would be our sense from the survey or the index that we produced and my own visits around the country. And this is just going to create more inequality, both here and possibly in the United States as well, although they've got a slightly more comprehensive program in the US. But the roads are not being built back quick enough. Housing is not being built back. Jobs are not being created fast enough, and it's slightly different in different parts of the country. But it's all over the UK that we need to invest more. We're going to have a consumption boom in the summer. Certainly, we've got 3 months extra economic growth as a consequence of the great vaccine program that we've run, but we need longer term investment. You know, what you and I have talked about a lot over the years is the lack of long-term investment into the UK, and that's what we need more of. We need just on a different scale than we've managed in 20 years.
The UK is also going through this massive lobbying scandal, right? And it'll really come at the forefront this week with a lot of investigations and a lot of committees looking at exactly what happened. Does that have an impact on the North-South divide? Is there even going to be a bigger mistrust, actually, of what Westminster does and how things work?
No, I don't think so. I think that's, you know, I'm a great believer in the confidence that the Prime Minister and the Chancellor are both hugely committed to doing it. But it's also supported by local politicians. Again, something we've talked about before. You know, we do believe in localism around a lot of these decisions. That the best people for making decisions in Bristol or Glasgow, Edinburgh, you know, Newcastle, Manchester, Leeds, etc., are local people, and that they care very passionately about doing the right things for their particular economy. People are being a bit more intellectually honest, I think, is about the problems that they're really facing in their local communities, and they're huge after the pandemic. You know, there's all sorts of things haven't happened, and if we're not careful, we will have this K-shaped recovery, which we keep talking about. But that's what will happen unless we really step up and do things on a much bigger scale than we've been planning so far.
Nigel, I know you're a massive, massive football fan. Or would you be into the idea of this European Super League?
Well, we've sort of got a bit of it already, which is what everybody's comfortable with, and I think everyone is thrilled about the Champions League and how it works and how it operates, and got massive support from the fans and infrastructure. You know, this one looks, you know, financially incredibly attractive for the big clubs. And that's why it's being pursued. It's not for the common fan. And I'm a big Newcastle fan. I'm a very happy one after the weekend. But it's not for the common fan, and therefore I think there will be a lot of pushback from fans right across the country that this isn't good for anybody but the owners of the biggest clubs and some of the players within those biggest clubs.
But is it against the spirit of what you like about football, or would you not go as far?
It's certainly, you know, I'm a spiritual fan rather than a financial player in football, and so I would love it if the spirit of what we all think of as our national sport is taken into consideration, because we don't want this sort of super elite of 5 or 6 clubs just breaking away. You know, they get to play each other every year. There's huge excitement already in the Champions League, and you know, I do like things like the FA Cup as well as part of our great tradition here in the UK. And I'm hoping that we stay with the existing model because it works. But I'm absolutely confident that several of the clubs will make a lot more money out of this new model.
Thank you so much. Nigel Wilson, their Legal and General Chief Executive Officer. Now, before 2021, the concept of a non-fungible token didn't come up in day-to-day conversation. Now it makes headlines and lots of money. Up next, we speak to Jonathan Bixby from NFT Investments. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally. which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London. Now, you may remember Beeple's record $69 million auction earlier this year. That was the first time many people heard the concept of non-fungible token. Now, since then, the concept has become mainstream, and it has attracted many headlines and money. In short, NFTs are digital objects with a certificate of authenticity created by blockchain. Now, on Friday, we saw the first NFT vehicle to list worldwide. We're talking about NFT investment, and it launched on the Aquis exchange. And joining us now is the NFT investment executive chairman, Jonathan Bixby, who is also behind the crypto miner Argo blockchain. So, Jonathan, as always, thank you so much for joining us, and congratulations on the listing. First of all, what do you say to the people that look at NFTs that say, fine, it's fine, but how, they're worried that this is a bubble? Is it a bubble?
Yeah, great question. I mean, I think I got those questions back when we started Argo back in 2017. Is blockchain a bubble? Is BTC a bubble? I think clearly, it's proven that it's not. I think NFTs have the same logic as any collectible that humans have been collecting forever. We've been collecting since we were in caves, collecting stones and quartz crystals. And this is simply an extension of that. And really what the blockchain allows you to do is collect digitally and understand, as you said, the provenance of an item very transparently. And so, no, I think the reality is the collectibles market is somewhere between 300 and 500 billion dollars US per total. And I think that the reality is this market could get just as large. So my perspective is we're in the early innings.
So what kind of assets lend themselves best to tokenizations via NFTs? Is it art? Is it tweets? Is it real estate? Is it something else?
Yeah, I think all of those. I mean, I think each of those markets have certain market sizes that would dictate how fast they're going to grow. Art, obviously, is in the headlines with the Beeple painting. I think the most interesting market right now is sports collectibles. So if you look at what's happening with the NBA with Top Shots, the NBA partnered with a company called Dapper Labs, which just raised $300 million on a $2.4 billion valuation last week. And what that company is doing is taking digital cards and putting them on NFTs on their blockchain. And that company is doing about 200 to 250 million of volume per month. So almost as large as the entire card collecting market. They've done that in the last year.
Jonathan, what's to stop actually two people having a claim on the same underlying assets via two different blockchains? And in that case, who would make the arbitration?
Yeah, that's actually a great question. I think the answer is that the arbitration would be made by the buyer of that asset. So just like in art, if I have a painting by Da Vinci and I have a painting by Picasso, the reality is that the values of those paintings are determined by the buyer. And I think free market will reign in NFTs as well, which is if someone creates something on the Flow blockchain and someone creates the same thing on Ethereum, the question is going to be which one's more valuable. And I think the buyers will dictate that.
Given how young the industry is there a risk of fraud, like in the early days of Bitcoin?
I think there is. I think what you're going to see, though, is very similar. My analogy here is very similar to what YouTube has done when you upload a video. So it used to be that you could upload a video with a Coldplay song, and that video would live on YouTube, and they would go through and comb for copyright every once in a while. Now what you'll notice on YouTube is that when you upload your video, they do the copyright check there. What you're seeing with OpenSea and Rarible and all the other marketplaces, which will essentially be the YouTubes or eBays, if you will, of this market, they will start to check for copyright right when the item is uploaded, because it's not in their best interest to have fakes all over their websites. And so I think that the marketplaces will solve that problem. But at this point, it is a risk. And I think that's why you have seen organizations like ourselves come up who understand blockchain, understand the provenance of these digital items, and can therefore be a proxy to actually investing in them yourselves.
Yeah, I was going backwards and forwards with one of our resident, Bitcoin and NFT experts, Eddie van der Walt, and one of the things that we were wondering, Jonathan, is it linked to actually the price of Bitcoin at the margin? So if you look at the wobble, for example, that Bitcoin had at the weekend, does it actually impact how people look at NFTs?
I actually think in the short term, yes. I think in the short term, it's going to be connected. And as, for example, Ethereum goes, NFT prices will go. I think that will become disconnected over time as people become believers that the digital items that they have purchased have the intrinsic value that the market or that they believe they do. But I think that at this point, when Ethereum or Bitcoin wobbles, and trust me, this is a volatile space and will be for some time, I think that these NFT prices will go up and down. And that's why I think, again, you have to have very strong conviction about this market if you want to play.
Who's buying these NFTs? Is it the same people that would actually buy art, or is it a younger crowd?
Yeah, I mean, our thesis here is kind of comes back to what I would call human nature. And it comes back to this idea that there's 3 billion people in this world today spending more than 20 hours of their free time gaming. And that's living in a digital world. And these people are comfortable in the digital world, whether that's Fortnite or Minecraft or Roblox, or the things that I'm screaming at my kids to get off of their phones all the time. And the question, I think, fundamentally for these people is, are they going to prefer gold bullion to put under their beds like our grandparents did? Or are they going to prefer BTC? Are they going to prefer centralized banks or decentralized banks that are open 2 days a week and aren't satisfied until they're not satisfied? And then fundamentally, I think the question is, are they going to prefer NFTs or physical art?
Thank you so much, Jonathan Bixby there of
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But it's very close to that. This is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. I'm not talking energy only, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
NEOM will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero-carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain NEOM on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening, buzzes all around you here.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
One is the underperformance of the Sensex in India. It's down the better part of 2%, around the lowest levels since January after record virus cases in the country. The other story, of course, is the easing of fears around wrong asset management, that bad loan manager. That is what aided Chinese stocks, and it also is leading to a narrowing in Asian dollar bond spreads, down about 5 basis points today. And then in the FX space, the Japanese yen is one of the major outperformers in G10. It is stronger against the dollar to the tune of about 0.6%. We are looking at a 108 handle, a little bit of a bid for safe havens there with geopolitical risk mounting between the U.S. and Russia. In the European session, it is green really largely across the screen. We're looking at gains of about 0.25% for the stock 600 in Europe, around 0.2%, about the same amount for the FTSE 100 in the UK. And of course, one of the individual stock stories we are watching today is what happens with European soccer or European football. That is getting a big boost to shares of Juventus. It is one of the major teams that is looking at that breakout league. The shares are higher by about 8.8% off the back of those news. And then I also have my eye on euro dollar. We are back through 120 for the first time since early March. As for what the picture looks like with U.S. assets, again, we are coming off of record highs on Friday, and that means we are looking at a little bit of a softer open. The rest of the world kind of playing catch up to the U.S. The U.S., though, down about 4 points on S&P E-minis. As we continue to see a bid coming into the bond market, we're down 2 basis points on the 10-year yield to the lowest level in about a month, 1.56% on the 10-year in the commodity complex. I have my eye on copper futures up about 2.5% on that better growth outlook. And then, of course, Bitcoin, the story we have been watching all weekend, down as much as 15% on Sunday. We're recovering a bit of those losses now, but still down 8% from Friday's price, Matt.
I will just tell you that Juventus, the football club, has a soft J, like jogging, Juventus. Just so it's easier to remember.
Thank you, Matt.
Let's take a look at what's coming up this week. Later today, Justin Trudeau's government releases its first budget in 2 years. So watch for that, as Canada has really been under pressure, much more pressure than the U.S. due to the virus. Tomorrow, Apple's first product unveiling of the year, an accessory dubbed AirTags for tracking physical devices, are among the expected launches. If they work well, I will stop losing all of my stuff. Wednesday sees Russian President Vladimir Putin make his annual address to the nation under obviously intense pressure due to the Navalny situation. Then on Thursday, watch out for European Central Bank rate decision. The ECB likely to confirm asset purchases under its pandemic program will run at a faster pace until June. And Francine, it's really been interesting as you were away, though I'm sure you kept up via your Bloomberg mobile app. The ECB has come out with so much on the sequencing and the timing of reduction in the PEP program and sort of a turning around here. And it's been interesting to say the least, but hasn't really moved the currency that much.
What's jogging? That's the only thing that I'm trying to still figure out, Matt. I wonder. I mean, I don't jog, I don't jog, I don't do anything. So I, maybe it's something new that I haven't heard about. The mania, Matt, that drove cryptocurrency assets to new records ran out of steam at the weekend. Bitcoin plunging as much as 15% on Sunday before paring some of the losses. Now joining us is Bloomberg's Danny Berger. Danny, finally I know how to pronounce Doge. But if you look at the various cryptocurrencies, I mean, you have many of them, and they really went through a wobble, and that's probably an understatement.
Exactly. I have the big ones priced from Friday. Of course, I don't have Dogecoin here, Francine. I'm so sorry. Unfortunately, the terminal doesn't have cryptos on it that were created as jokes, but I know you have us kept true on the price of Dogecoin, which is up about 25% in the past 24 hours. So you can see the action here. This is better than the peak, or rather the dearths of what we saw on Sunday with that 15% decline. Typically with crypto, it is a grab bag of reasons why it might be down. It could be fears of regulation, the Turkish central bank banning crypto and use of payments. It could be the online speculation over the U.S. Treasury cracking down on money laundering via crypto. Whatever it is, it does mean that some of these gains are coming back, but still we have to keep in mind volatility is normal in the crypto space. Bitcoin, for example, still up 93% year to date. Ether still up 200% year to date. If anything, it's just this volatility that reinforces the more usual players, the more institutional who want to get in, that this isn't a calm asset yet. Of course, one of those more institutional plays is Coinbase, and this is part of the reason it might have moved. We had record highs alongside the debut of that stock. It is down in pre-market trading, down about 3.5%, perhaps again in reaction, because this thing doesn't trade over the weekend, so catching up with that weekend crypto action, Matt.
I want to, an astute viewer pointed out to me last week, Danny, that it doesn't really matter why an asset was created. Those reasons are, inconsequent when you look at a market cap of $50 billion. It definitely should be on the map. Right. I want to point out, speaking of on the map, that the Greens are on the map here in Germany. We're just getting headlines through that the Greens have selected Annalena Baerbock as their chancellor candidate. This is a 41-year-old party that's never really had a legitimate shot at winning the race, and now it does. Their polling has been exceptional. They're edging out the CDU, CSU almost at the same levels, and depending on what poll you watch, they could be even eclipsing the ruling party or the ruling half of the current coalition. So Annalena Baerbock has been selected as the chancellor for the Greens, really have become a hugely important force in German politics. Joining us now for a little bit of discussion here is Bloomberg's executive editor for international government, Roz Matheson. So Roz, this is, I guess, an historic moment, although it's been building for quite some time as the Greens really gain power in Germany.
That's right, and it's interesting that they've managed to pick their candidate even as the Conservative bloc is still struggling to get theirs. As you said, this is the 40-year-old political scientist who actually became a co-leader of the Greens only in January 2018, but alongside her co-leader, Robert Habeck, has really kind of reinvigorated the Greens and brought them much more into the mainstream political space in Germany and edging very much towards the Conservative bloc in polls. And you can see that reflected in a way in the sort of the contortions that Angela Merkel's group is now going through trying to pick their candidate for Chancellor in September, because they need someone who can really take the Greens head on. And that's why you've perhaps seen the rise of the Bavarian Premier, Markus Söder, who's seen as much more popular with the public and more in touch with the public than the CDU leader, Armin Laschet, who is seen equally as being a bit more out of touch and hard to connect. And that's why you'll possibly see Söder get the edge later today as the announcement of him being the person who will lead that bloc into September.
Well, Roz, whoever the next chancellor is, they are going to have to navigate relations with Russia. And the U.S. over the weekend warned of quote-unquote consequences if opposition leader Alexei Navalny dies on hunger strike. What would those consequences look like? Could we see coordinated Western action in retaliation to Russia?
Well, that's the question, really. What else can they do against Russia if Navalny were to die? Of course, we're just getting news now that he's been transferred to a regional hospital. He's going to start vitamin therapy. He's been imprisoned at a notorious prison camp outside Moscow since early March and on a hunger strike since March 31. And obviously his health has deteriorated significantly as part of that. And you have countries around the world warning Russia that if Navalny were to die, that there would be consequences. The French president talking about red lines with Russia. But the real dilemma is, what else can you do beyond the sanctions that have been put on Russia already? The one thing that's not been done, of course, is sort of sanctioning Russian debt in the secondary market. And that would be a really significant move. But so far, there's no sign that the U.S. is going to go towards that. So then at the moment, we're sort of wondering what other options might be on the table for coordinated action.
All right, we will all watch and wait to see how this develops. Bloomberg's Rosalind Matheson, thank you so much. I do want to get a quick check now on some stocks moving in pre-market trading here in the U.S., one of them being GameStop, the poster child for meme stock mania. It is higher in early hours by about 6% after Roaring Kitty, also known as DFV, the Reddit user who helped fuel the stock surge earlier this year, exercised his call options and bought up even more shares. Then along with the rally in Juventus in European trading, Manchester United shares are higher by nearly 4% in pre-market on those plans for a European breakaway league. To the downside, though, Peloton, U.S. regulators warning consumers about the company's Tread Plus exercise machine if they have children or pets at home after injuries and even the death of one child. That stock is lower by the better part of 6%. And then, of course, that Bitcoin volatility Danny was just running us through means Bitcoin-tied stocks under some pressure in the pre-market. Coinbase down about 3.5% before the bell, Francine.
Yeah, quite a lot going on with these little, well, individual stocks. Now, not so little, actually, but just individual stocks. Now, coming up, we speak with Seema Shah, Principal Global Investors Chief Strategist. Maybe we'll touch on crypto assets, but we'll look at the volatility ahead. And then after that, Elizabeth Bra, American Enterprise Institute Resident Fellow. We'll talk about Germany with her and also Russia. We understand through IFX that Mr. Navalny has now been transferred to a regional hospital. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller here in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, I just wanted to point out that European stocks have had a tremendous run, 7 weeks in a row to the close on Friday of gains. And if we see this continue for an 8th week this week, it'll match the longest winning streak we've had in 9 years. In fact, this year, so far this year, we've only seen 3 down weeks. So European stocks, Francine, have had a tremendous gain and not really been hurt by the slight resurgence that we've seen in the euro dollar.
Yeah, which is surprising to me, Matt, because when you speak to a lot of strategists, and we were speaking to someone from the JP Morgan Private Bank a bit earlier on, they said, well, look, Europe does present some opportunities in certain pockets, but actually overall, it's really a story about the U.S. recovery, the U.S. being strong and actually vaccinating. So where do you find value in Europe? Let's ask Seema Shah, Principal Global Investors Chief Strategist. Seema, thank you so much for joining us. When you look at where Europe is in terms of vaccinations, in terms of, frankly, like fiscal support, we still don't have any money being dispersed by the European Recovery Fund. Would you invest in Europe, or would you just go elsewhere, mainly the US?
Hi, Francine. Yeah, look, Europe is not our favorite region at the moment. There is a lot to say in terms of the reopening trade and the fact that maybe it's, from a valuation perspective, it does look a little bit more attractive than the US. But I think we're looking at a secular growth story, which is still not as impressive as what you're going to get from the US. We think there's better opportunities outside. And we're also a little bit concerned that there's so much, a lot of the optimism is really resting on this assumption that European vaccination rates are going to accelerate. And the last few weeks have lent us a bit of caution when it comes to those expectations.
What is the one thing, Seema, that could actually derail all of that? So if you look at U.S. dollar and the trajectory for U.S. dollar right now, if it goes weaker rather than higher, does that make Europe a little bit more attractive?
Well, I think, with the US dollar, if the US dollar weakens and we're looking at a global reflation trade, which is still in motion, I think we would prefer to put this global reflation trade in emerging markets rather than Europe. I think that's where it's more likely to play out. Of course, you have to be very careful about which country you're picking, but we would still have that preference, partly because even from a secular side, we think that emerging markets has a lot more growth potential long term. So I think Europe has a long way to go before it becomes, the favored region for us.
Europe does have a lot more cyclicals, banks, healthcare. I mean, just the way the indexes are structured, Seema, as we see this rotation back into value, does that give us a leg up?
No, I think it certainly does. We're absolutely not saying that Europe is not going to be performing well. But we have a lot more confidence in other regions where they're not just resting on this hope about vaccination rates. As Francine said before, the fiscal stimulus program in the US, when we look at the amount of savings and the consumer spending potential in the US, these are really kind of positive stories that we think will propel the US forward. Now, there may well be pullbacks over the next couple of months. That's certainly something that we need to consider. But I think from an overall global growth story perspective, there's just a lot more certainty in other areas rather than Europe.
Seema, you talk about the fiscal stimulus here in the U.S., the recovery taking shape here, the better vaccinations, and of course we're seeing beats on the economic data, and yet I'm looking at a 10-year Treasury yield at 1.55%. What do you chalk that up to?
You know, well, it was certainly intriguing last week to see the way that bonds rallied despite the very, very strong economic data from the U.S. And I think when we're looking at this, we're thinking, well, look, you know, I think everyone came into this year expecting bond yields to rise to around the 185, maybe 2% level. But I think the move was so quick that now we're seeing a bit of a retrenchment, investors taking a little bit of a step back and thinking, well, look, this has moved very, very quickly. But we don't doubt that there is an economic reflation story which will drive bond yields higher over the coming months. But it may well be at a slower pace than what we have seen in the last few weeks.
How high do you think bond yields could go here in Europe? Could we get back to positive yields on the Bund?
I think it's possible, right? You know, although from a relative value standpoint, the US is more attractive, there is still a good recovery story in the potential for Europe. And especially when you have got US Treasury yields likely to rise, inevitably they will drag everything up with them. So there is a lot to say for European government bond yields rising over the coming months. And from our perspective, you know, if you're looking at fixed income, I don't think European bonds is probably, you know, the place that you're going to pick at this stage.
Seema, when you look at, you know, the U.S. fiscal injection, when you look at the transition or the inflation that you're expecting to be transition, is there something out there that we're underestimating? Is the U.S.-China trade war back on the cards?
I think that's never really left. But again, it's one of those stories which is going to be stirring over a long time. We are reluctant to believe that this is something which is suddenly going to hit markets, but it may well play out over many decades. I think the one area that we are concerned about, of course, is actually for the US dollar. As again, you know, we all came into this year expecting a weaker US dollar story. And if anything, we've seen quite the opposite. Now, we do believe that US dollar is going to stabilize from here. But given the significant growth differential between the US and the rest of the world, I think there is, you know, potential that you could see further US dollar strength, which then starts to change the story a little bit. But I mean, from all the risks that we can anticipate, probably inflation is the biggest one. And then what happens to the US dollar in line with that inflation story is probably the most significant concern to us from an investment perspective.
Seema, thank you so much for joining us today. Seema Chandra, Principal Global Investors Chief Strategist. Now, coming up, Michael Spence, Nobel Laureate, General Atlantic Senior Advisor. He's talking to us at 6:30 a.m. in New York, 11:30 a.m. in London. I know he'll have a thing or two to say about vaccination, especially in Italy, where he's based. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get to the Bloomberg First Word News. And in Minneapolis, closing arguments are set for today in the murder trial of Derek Chauvin. Well, he's a white former police officer who's accused of killing a black man, George Floyd. The killing of another black man by police in a Minneapolis suburb has increased anxiety over the potential for violent protests. China says it has no desire to topple the dollar as the world's main reserve currency. That's as Beijing takes bigger steps in creating its own digital yuan, while the deputy governor of the People's Bank of China says it's creating the digital currency for domestic use. And Citigroup is pushing ahead to set up new investment banking and trading operations in China. Just last week, Citi announced it would shut down its retail banking operations there. Bloomberg has learned that the bank will soon name a chief executive for the business. The goal is to get the operation running within 18 months. And then this could be the biggest shakeup in professional football in decades. Soccer for our American friends. A group of the world's richest football clubs are planning a European breakaway league starting in August. Among those taking part, Manchester United and Real Madrid. The Super League teams would play each other midweek as an alternative to the prestigious Champions League. I have to say, Twitter's on fire, Matt. First of all, Boris Johnson also weighing in on the debate, which, so many people are now renouncing their own clubs because they're doing this, and actually they say it's just against the spirit of football. Boris Johnson saying that the breakaway league is not good for fans, and he will do whatever he can to stop it. That's pretty hard, pretty strong words.
If it's true, he doesn't need to do anything, right? Fans will vote with their eyeballs, and if they want to watch this, they will, and if they don't, Champions League will continue to reign.
Yeah, it's a shame that Leicester, I think, won, the odds of them winning in 2016 was 5,000 to 1. It'll be the end of that. More on the markets next.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's quite a lot going on in the world of football. No, there's also quite a lot going on in the world of markets. But actually, Matt and Kaylee, we've been talking a lot about this football, or, this European Super League, soccer, if you're American. And Boris Johnson really weighing in, saying he will try and not make this happen. Matt, it's pretty shocking, as you were saying, when politicians kind of, it's not really something that's their remit. So when politicians start talking about football,
it always kind of stuns me. Yeah. I mean, it always kind of stuns me. We see it in the U.S. as well. John McCain famously was very involved in NFL activities. But my view is this is a free market, right? Shouldn't these companies be allowed to do whatever they want, especially when we're talking about something that's not necessarily a public good like water and healthcare? I mean, this is a game. And if they want to show the game in a different way with a different group of people, they should be allowed to, and the consumers will vote with their wallets.
Not a public good? So many people would disagree with that.
It's a public boring to me, because it's always like 2-1 or 1-1. You can have a game that's 0-1. I mean, I don't really get it. I've never gotten it, but I understand that hundreds of millions of people, billions of people care about football, about soccer. So maybe it's just one man's opinion.
Yeah, I can't believe I'm actually sandwiched between two people that care less about football. Even I care about football, and I certainly care about this story. Kaylee, what are you seeing on the markets?
Well, I just care much more about American football, Francine. That's my thing. I will say there is a market tie-in to this. Juventus, Matt, up 11% in European trading at this point. So the market really does care about this story. Of course, when it comes to the broader markets, we are looking at a fresh record high for the broader European equity market, though we are off the highs of the session, up just about 0.1% on the stock 600. Here in the U.S., we are coming off of record highs on Friday, but we do look like we will see a softer open, down 6 points on S&P E-minis as we see a bid coming into the bond market. We're down more than 2 basis points on the U.S. 10-year yield, sitting right around 1.55%. That aiding, of course, a weaker dollar today. And then, of course, Bitcoin, the other story other than European football that we are watching, it is down 8% from Friday's price. It fell as much as 15% on Sunday, which was yesterday. Right now, we're sitting right at $57,000, almost $8,000 below the all-time high we notched last week. Of course, with that move lower in Bitcoin, seeing a number of crypto-related stocks under pressure in pre-market trading, one of them being Riot Blockchain. It's down more than 8% before the bell. 2 Bitcoin miners, Marathon Digital and Bit Digital, down about 7% and 6% respectively. And then, of course, Coinbase had a very volatile week last week after its debut, after its direct listing, and once again in pre-market trading down by about 3.5% before the bell, Matt.
Whenever I see, a headline about Bitcoin tumbling, I always hope that it's a bigger drop, because I want to be able to get in, all right? I want an entry point, not that I actually buy assets that I report on. I don't think that would be terribly ethical for investment purposes. I do want to point out, it's a little bit surprising on a day when the dollar is down so much that Bitcoin is also off. I mean, the dollar has had a horrible year, which has to have some effect on the impetus of the cryptocurrency, but this last week was the worst all year, and the dollar is down again today. You showed the euro, Kaylee, and the yen earlier. Another thing that the dollar drop boosts is the S&P. This chart shows that the S&P has really formed an inverse relationship with the Bloomberg Dollar Index, and I think that's interesting to keep an eye on. Francine, we typically see this, with the pound and the FTSE, but it's very interesting to see such a strong inverse relationship with the dollar and the S&P.
Yeah, I love that chart, Matt. Wonderful chart, and I know we'll talk about it for the foreseeable future. Now, it could be a massive shakeup of European soccer or football. 12 of Europe's richest clubs, including England's Big Six Premier League teams, have announced plans for a breakaway tournament. Now, the so-called European Super League would be a midweek alternative to the Champions League. Well, joining us from Brussels is Bloomberg's Maria Tadeo. Maria, I mean, this has Twitter on fire. There are so many high-profile people that actually love their clubs that I said, you know, I don't want to be a fan of that club anymore if they do this, because it really goes against the spirit of football, but they're in it for the money.
Yes, Francine, and look, with this story, which is, I mean, it's a real bombshell because it could really change the way that football is played in Europe. And contrary to what Matt Miller said, football is something that really, really matters, and it's not boring, Matt. It's actually very fun. But I would say, you know, this completely moves away from the institutions that we have in Europe. You know, it would move away from FIFA, it would move away from UEFA, it would move away from the Champions League. Francine, you know, that's almost the climax of European football and would devalue a lot of the competitions, but also for the fans, as you say, this goes against the ethos of football. You know, this being a popular sport, this being something that was almost, you know, very working class in its inception. And now you have teams that are the elite of the elite deciding we want to do our own thing, create our own competition. Of course, there's a lot of money, revenue stream coming from that. But you see that this is football. It's the game, of course, but it will also be the players, it will also be the teams, and it will also be the politics behind it. There's a lot of it happening today because we're expecting UEFA and FIFA to put out a statement in response to that announcement yesterday, which, as I say, it's a real bombshell.
Yeah, it's a bombshell.
You know what, I have to say, Fran, I may be just bitter because when I played football, when I played soccer at the Columbus Academy as a kid, Casey Morin, our coach, always had me on the bench, and it was a little bit of a bummer. So maybe I would appreciate it more if I had been better, you know?
Okay, we're going to do a five-a-side team for
you probably would.
The surveillance early edition. Now, Bloomberg's Maria Tadeo there with, of course, all the money and the bucks involved around European football. Now, coming up, Elizabeth Braw, American Enterprise Institute resident fellow. We'll talk to her about Germany. We'll talk to her about Alexei Navalny and Russia. This is Bloomberg.
Is there anything you think the Fed should be able to do to help people who are really suffering in the pandemic?
I think they need to be in the room with us as we make our decisions about monetary policy.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, the U.S. is warning there will be consequences if Russian opposition leader Alexei Navalny dies in prison. Now, the jailed Kremlin critic is currently in his third week of a hunger strike, with allies warning he could die in days. Here's what U.S. National Security Advisor Jake Sullivan told CNN.
Communicated to the Russian government that what happens to Mr. Navalny in their custody is their responsibility, and they will be held accountable by the international community. In terms of the specific measures that we would undertake, we are looking at a variety of different costs that we would impose, and I'm not going to telegraph that publicly at this point, but we have communicated that there will be consequences if Mr. Navalny dies.
Well, joining us now is Elizabeth Bra, American Enterprise Institute resident fellow. Thank you so much. Professor Bra, when you look at the latest, movements, we understand that he's been transferred into a hospital. We understand that it's a prison hospital, although that's not been confirmed. But we don't know the state of Mr. Navalny. If something happens to him, but he has been transferred in a hospital, what would the allies with the U.S. actually do?
Yeah, this is an incredibly tricky question, because on the face of it, it's really a matter for Russia alone how the fate of its prisoners. But clearly, this is not just any prisoner, and it's a prisoner who seems to have been jailed for political reasons as opposed to criminal reasons. So everybody's watching, and the point is that the West has to signal that it is paying attention, that it won't accept the death of political prisoners in Russia. What it could do is something that the UK government did after the Skripal poisoning, which was to essentially turn off the money flow going in and out of Russia. Now, that's something that you can't communicate beforehand, because then, as Jake Sullivan said, he's not going to say what the United States is going to do. But things like that would really hurt Russia, as opposed to the usual personal sanctions and expulsions of diplomats. Those are things that Russia can count on happening anyway, and it's easy to just sort of calculate what you should do. But so unexpected things having to do with money and Russia.
But Elizabeth, would they hurt, or would they actually deter President Putin? I mean, we've seen, the use of Novichok on UK soil. We've seen the annexation of Crimea. Does Vladimir Putin actually care about what the U.S. and allies do at this point?
That's a very good question. What deters Russia? Well, we can't know until we can ask President Putin personally what deters him, and clearly those conversations are not happening, if they will ever happen. But what we can do is hurt Russia or target Russia where it hurts, and it is dependent on the globalized economy. It's dependent on exports. It's dependent on the global banking system, which is why, for example, President Biden last week announced that the U.S. will block Russian debt being accepted by American bank, and that will have implications for other banks as well. So those are things you can do that will really hurt Russia more.
Elizabeth, can I just get in here? Because surely Putin knows there are so many workarounds to the sanctions that Biden announced against Russia last week. And at the same time as everyone says there will be consequences, Angela Merkel and the German government are putting the finishing touches on a money funnel that goes straight from here to Vladimir Putin's war chest. As long as they're doing something like Nord Stream 2, isn't it silly to talk about real consequences?
That is exactly the dilemma we're in, Matt, that we live in a globalized economy that wasn't present, for example, during the Cold War. During the Cold War, you could really punish your adversary even without invading them. Today, that's just not possible, because we're completely interconnected, not just with we as the West, not just with Russia, but with China as well. So as you say, yes, these measures won't frighten Putin too much, but hitting him in the financial area is still more effective than expelling a few diplomats, because guess what? If we expel diplomats, they will expel diplomats too, and so it's back to square one. And that is the dilemma today. And by the way, if I may add, it was interesting to see that the case has come to light over the weekend in the Czech Republic, that those same guys who were found to have perpetrated that or have killed two Czech workers at an ammunition depot, it was the same guys who did the Skripal poisoning, and they didn't even bother to conceal their identities.
Elizabeth, what about the internal pressures within Russia? We know that more than 450,000 people have pledged to take part in protests. Does that impact the Kremlin at all?
I think yes, that will be impact, but far less than it seems to us here in the West, because what we see are people in Moscow and St. Petersburg, and these sort of westernized Russians who think like us. But as long as Putin and his party and his machinery has support throughout the country, it won't really rattle them. And yes, it will increase Western pressure on them, because we are seeing the protests, and we sort of say, yeah, now there is change afoot in Russia. But it is, at the end of the day, it is the tens of millions of people in other parts of the country whose voices count more than these 450,000 demonstrators or protesters who have announced that they would participate.
I wonder if you think the relationship between Germany and Russia will change due to this election. It looks like Markus Söder may take the reins from the CDU-CSU, and we've just heard that Annalena Baerbock, although it's no surprise, is going to be the Green chancellor candidate. I think the interesting thing there is the amount of support that the Greens have. Does this play into the calculus at all?
I think we'll see a much more ideological, or you might call principled, German foreign policy if the Greens win, and if they were to become the leader of a coalition, and presumably it would involve the Social Democrats and the Free Democrats as junior partners, then we'd see a much more principled foreign policy vis-a-vis Russia. Of course, the Greens could conceivably team up with the Christian Democrats, where they would be the junior partner if the polls hold. But the point is that the Greens are much more ideological in their foreign policy than the Christian Democrats and the Christian Social Union from Bavaria, which is more sort of business focused and more adjustable in its foreign policy. So I think there are tougher times ahead for Russia in Germany, and we should remember Germany has long been one of Russia's best friends in Europe, or certainly one of the countries most sympathetic towards Russia, even when it was difficult to be sympathetic.
Thank you so much for joining us, Elizabeth Brother, American Enterprise Institute Resident Fellow. Now, coming up next, Helen McShane, Professor of Vaccinology at the University of Oxford. We'll talk about trials, we'll talk about vaccine, of course, immunity, and how long it lasts. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix in London, Matt Miller in Berlin, and Katie Lyons in New York. Now to a landmark coronavirus study from Oxford University, and it will be the first to reinfect recovered COVID patients to try to discover what kind of immune response can stop people from being reinfected. Well, joining us now is Helen McShane, Professor of Vaccinology at the University of Oxford. Professor, thank you so much for joining us. There's so much that we want to understand with this trial and other trials. What's the most pressing issues that we still don't know? Once you're vaccinated or once you've been infected, can you still transmit it if you're exposed to it, or is that what we're trying to find out?
The key thing we're trying to understand in this study is what kind of immune response, what flavor of the immune response protects people against reinfection. We know that reinfection, once you've had COVID once, is unusual. It's not impossible. People are certainly reinfected again, but it's not very common. If we can understand what type of immune response is conferring that protection, we can use that information to better design vaccines, to better and more rapidly test vaccines, and better design treatments.
Professor, I noticed the virus you'll be using in the study is the original strain from Wuhan, China. Why choose that rather than one of the newer variants that we still are trying to learn more about?
Sure. So I think it's really important that we're starting these studies for the first time with the Wuhan strain. It is the strain we have the most information about, we know the most about, and we can therefore be confident to design a safe study. There are many discussions underway to think about whether in subsequent studies we could use a different variant and one of the newer, more emerging variants. But I think to start with, we need to start with the strain we know the most about.
Doctor, I had Lyme disease many times as a kid, and at the time, since I'm so old, they just thought, hit it with doxycycline and you're good. However, there are obviously lingering effects, really bad lingering issues with that. Are we going to see the same with COVID, and will you understand more about it after this trial?
So this trial won't specifically look at long COVID, which is clearly a problem with some people who have COVID infection. We are confident that the risks of long COVID after this study are very small. We will be recruiting young, healthy volunteers who have had a very mild or even asymptomatic first infection and have no signs of long COVID after their first infection. It would be very unlikely that after the very low dose of virus we're going to be giving them, that they would have long-term consequences in this study.
Can you understand through the study what it means for vaccines and whether we'll, how often we'll need a vaccine renewal?
Exactly. So this study, once we've identified the type of immune response that makes it impossible for people to be reinfected in our challenge study, we can then use that information to then test vaccines, because we then know that what we want the vaccines to do is induce exactly that kind of immune response. We can then look at durability, how long vaccines induce that response for, and indeed how long that response is induced for after natural infection.
So is it likely that we then get a one booster every year, maybe something that covers this as well as the flu and other issues?
This information generated from this study will address exactly that kind of question. Yes, absolutely.
Thank you so much, Helen McShane, there, professor of vaccinology at the University of Oxford. Now, I look at what else we're watching. A lot going on. Again, there are some really good stories, actually, that, we're watching cryptocurrency. There's German election. But, Kaylee, what's on your radar?
I'm watching cryptocurrencies, Francine. The weekend was incredibly, incredibly volatile. I know what else is new when it comes to Bitcoin. It always breeds volatility, but down as much as 15% on Sunday. We are recovering some of that today. Bitcoin right now up about 1%. But we're still sub $57,000. And the record high reached just last week was close to $65,000. So this has been a pretty dramatic re-rating. And my question really is why? Is it regulation fears? Did the rally just get too overheated? Is it other idiosyncratic issues? It could be a combination of all of the above. But of course, Matt, I'm going to continue to pay attention to it all day today, probably all the rest of the week, and probably for the rest of my life, honestly.
Yeah, well, maybe for the rest of your life. And if so, then this dip isn't a problem. I think the question, Kaylee, of why we saw this dip is an important one, but we should keep in mind also how concentrated Bitcoin wealth is. I think 2% of the holders hold 95%, some amazing stat like that of all Bitcoin. So the whales can move the price quite a bit. I'm going to be watching German politics. You know, we've got a Green candidate now announced in Annalena Baerbock. That was a foregone conclusion, but still interesting because they have garnered so much support over the past months and years that they are really a force to be reckoned with now in terms of the election coming up in September. But the open question, of course, is whether or not the reigning favorites, the CDU-CSU, can actually pick a candidate. They bigger CDU part of the party has Armin Laschet as their leader, but he polls so poorly that the CDU would probably do better picking an SPD member as their chancellor candidate. Meanwhile, the CSU leader, Markus Söder, has thrown his hat in the ring and is not backing down, and he polls far better. So the question is, will they choose him for a fighting chance in September? Yeah?
So do the Greens really have a shot at this?
Well, I'm not a political analyst, but they're polling almost as highly as the CDU-CSU, and the trajectory they're on is an upward slope. So they do have quite a bit of support.
I'm watching football. I never thought I'd say that. I usually leave that to Jonathan Ferro, but I am watching football. Juventus stock actually up most in a year. I think it was up some 10%. But Jonathan Ferro, Tom Keene, all over the football story.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Things appear to be too perfect right now, but you're kind of in a Goldilocks period.
Fundamentals will trump here, and fundamentals are going to be incredibly strong over the remainder of this year.
The political establishment today is much more willing, and in fact, in many cases, invites higher inflation.
Everything we follow would suggest every bit of inflation is being passed through and then some.
You're going to see higher inflation, and the Fed's going to be caught by surprise because it's really following the wrong model.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Oh, this is going to be a good one. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Sport alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow.
What do you think?
Jose Mourinho reportedly sacked over Tom Keene's tots. He's on the phone.
It's got to be Ledley.
If
it isn't Ledley, I just don't care.
This is going to be a special Monday morning.
You think?
Tom, you want to talk about this European Football League?
Well, we'll talk about it through the day. Can before we get to football and soccer, and folks, we'll do this for our global audience through the day. It's amazing what's going on with Mourinho out and the rest of it, John, that you know far better than me and Lisa. John, the most important research piece this morning was HSBC reaffirming lower yields. We had the opening of our show, which is the zeitgeist of inflation and higher rates.
Yeah.
And the Hong Kong and Shanghai Bank is saying
no way.
No.
I'm shocked. I'm shocked you started with this. I'm absolutely shocked. If you want to go there, I can. I read the piece too from HSBC.
That's
Negative 50 basis points is their 10-year bund target still going into year-end, Tom. Is that what you're talking about?
Yeah, that's what I would talk about. I mean, they're looking at the fears of inflation as a cynical project. Wait, that's what the Telegraph and others have reported on European soccer. John, for our global audience, and we'll do this through the day, you say this is decades in the making to get to this point.
We've been talking about this for 20 years. This is about power and money, and it's about the former to control the flows of the latter. It's always been about that, and this is about telling UEFA that we want control, and we want to control the flows of the money, and it's always been about that and still is. And I'm not going to sit here with some romantic notion about how this is going to ruin the game. Let's get real. This game got ruined a long time ago by money, Tom. It's a business. It's still a business.
The first thing I thought of as the rank amateur here is, John, I think you reminded me of 2015 in Leicester coming out of nowhere to win as well. I mean, there's many Leicesters out there in all these countries. Am I right that they would be pushed aside by these large teams?
Look, the domestic league would continue. Look, here's the issue on the table right now. You've got these 12 founding clubs that are talking about maintaining participation in domestic leagues. You've got the domestic league saying we don't want you in this league if you go away with this breakaway format. And I keep hearing about the Leicester comparison, Tom. Leicester winning in 2015-16 was a bug, not a feature. It was a total anomaly. A fluke even for many people, apart from maybe the Leicester fans. We haven't seen it again, Tom, and we've hardly seen that in the last 20 years either. Yes, these smaller teams would probably lose out on some money because the bigger clubs would dominate the television viewings and the ratings in midweek. But that's been a story for the Champions League now for much of the last 20 years. There's many teams in these domestic leagues that aren't fighting for the league. They're just fighting for Champions League participation. And that's ultimately what this comes down to. So final point, Tom. This is about earning your right to play in Europe's premier competition, and the big European players saying it's no longer about that. We want a guaranteed right to being in this competition every single year for decades.
Will the players get more money? I hear no discussion here of the players.
The players will likely get more money because the clubs are getting more money. Tom, look at the numbers in our write-up this morning. Under the plan, 15 founding teams would get an upfront payment that they would share of 3.5 billion euros. You'd have to imagine the players would want more money. And another reason the players might want more money is because the governing bodies of football, UEFA for Europe, FIFA globally, are set to tell these clubs that if they go away and do this, the players that play for them won't be able to participate in the national competitions. If you can't represent your country, it's got to be a price for that.
One final question. Lisa's looking at the ceiling going, why are we doing this?
No, I'm not. I think it's fascinating.
John, could AC Milan, and I should point out it is Mr. Farrow's AC Milan, could AC Milan fit into the Premier League? Where would they fit? Would they be a top 4 team, or would they be
given how we're playing at the moment? I think they'd probably be mid-table, given how we're playing at the moment. And I think the beauty for an AC Milan fan right now, Tom, is we haven't been a regular feature in European football for 10 years. For 10 years.
I don't know. It's bizarre. We're going to cover this through the morning as well. I believe we have a guest here that
I'm shocked you started on the bun market this morning. I don't know about you, Lisa.
No, come on.
I went to football for him. I thought he'd want to talk about his dear Tots and Jose Mourinho, and you want to talk about HSBC forecast.
Too. Okay,
you get that done. Here's the price action. Equity futures -7 on the S&P 500. This is how we're set up this morning. Down around about 0.2%. Nasdaq futures coming in 0.1%. Can we show the bond market this morning?
Can
we do that a little bit? Maybe we can't. Lisa, confusing this morning. Futures down 0.6%. All-time highs at a close on Friday.
Yeah, although really we saw futures fluctuating. We do see yields headed lower. They were 1.55% on the 10-year earlier today. Kind of interesting that we have this pressure in yields, price up, yields down, even though it does seem like the reflation trade is gaining steam. Okay, here's the deal. I'm not going to pretend that I know anything about European football, and yet this is a fascinating story. So from an ignorant standpoint, this is my understanding. UEFA, which John Farrow told me how to pronounce today, so I'm not even going to pretend that I knew what that was. The Union of European Football Associations was going to plan to weigh in today on whether or not these clubs would share more money and play more games. That's my understanding of it. And basically, it seems like the timeline for this special league is to try to upend this plan because people didn't like it and they want to keep the money in them for themselves. That's my understanding. If anyone else wants a sort of briefer, John can correct me later. Then after this, what I'm looking for today, 11 a.m., Joe Manchin, the senator from West Virginia and really the swing player who potentially could be the crucial vote for any stimulus plans, will be having a meeting at 11 a.m. This is going to be with the coal miner union's leader. The idea here is to try to find some sort of agreement with respect to green deals and trying to reduce our carbon footprint. And then today at 1:15 p.m., President Biden meeting yet again with another bipartisan committee to try to hash out some sort of plan for the $2.3 trillion stimulus. Over the weekend, John, and we're not going to be talking about this at all, but I did think it was really interesting, Republicans saying they could get on board with a bipartisan $800 billion plan for some sort of stimulus spending on infrastructure. They want to be on board with this. I do wonder how much this is a talking point so that they can go to their constituents and say we tried.
I have to restart the show, Lisa. This is Bloomberg Surveillance, and we won't just be doing sports this morning. That was a great job, I have to say. Ben Emmons joins us now, Medley Global Advisors, Global Macro Strategy Managing Director. Just to try and make this a little bit more orderly, Ben, you can give us your reaction to the sports news quickly, and then we can move on to the markets. Go ahead.
You know what's great, John, and thanks very much for having us here, is that AFC Ajax, who's not in that group, is actually up in its share price, which has been flatlined for many years. So I'm pretty happy about that. You know, they have a chance to get into that group. Other than that, I think it's, you know, as you mentioned, it's an evolution of getting the power clubs together and share this money and have this, you know, more stake in their own game as opposed to having the UEFA or the Champions League controlling it.
Juventus up about 11% over in trading in Milan as well. There is money involved. There is always money involved. But the money we've got to talk about, Ben, is what happened in the market last week. Great data, big rally in treasuries. Why, Ben?
I think, John, it's about this, what they call the sequential slowdown. And what I mean by that is that if you look at China GDP, for example, it came out at 18.3%. It was actually stronger than expected. But the quarter-over-quarter number was 0.6. And that shows that momentum slowdown that China is already experiencing. Some other countries in the Asia-Pacific experiencing it too. They're coming out of the pandemic a bit ahead of us. So I think partly the yield decline has been about that. We have super data. It's really hot and strong. You would actually think, well, that should lead to higher rates. But I think the bond market is signaling this is not going to stay this way. The hotter the data, there's going to be a cool down period after. I think that's what's reflected in the price action.
What I saw over the weekend, Ben Emmons, and I think this is germane to economics, is the rationalization of why we need to worry. We have pushed against this wall of worry, and there is a massive rationalization now redefining the worry. Does the Fed have a legitimate worry about this bull market rally, or are they immune to it?
I don't think they're immune, Tom. I think they are taking stock of financial stability, and that is, as we talked many times before, it's like that third mandate idea. But I also think that they look at these financial conditions as something that is really needed and essential to get this recovery really, really on track and stay sustainable. So it's a bit of that trade-off idea. They can't use interest rates to address financial stability at the same time. They have to address it through their policy setting by, it's not surprising.